Is uranium losing the energy battle? Giant, that's one of the topics that you have a controversial opinion on. I'm saying one of the topics because you have a controversial opinion on many other things. So we're going to be talking about the India-China natural resource war. We're going to be talking about, again, coal's dominance for uranium's challenges and stuff like that. And I'm coming up with a good title here as we speak. Uh, but yeah, been a while since you and I sat down, Giant. So thank you for investing your time in me. But I'm rushing to talk to you about the current situation in energy and critical metals. And I know you've remained active in the market, as many may have sold on me and went away. You've been traveling a little bit. So what are you most active in right now? What are you doing? What part of the market's got your eye?
Antonio, I have recently spent a fair bit of time traveling in China, and I continue to be very optimistic about the future of China, despite the fact that Western people are not optimistic about China, and Chinese themselves are very pessimistic about it. So, despite everyone being pessimistic, I quite like what's happening in China. I have driven around China quite a bit. I really like their infrastructure. I hardly ever come across a pothole on Chinese roads. They have done a fabulous job with their infrastructure. I think the country is facing a few bumps right now. They have clearly an overheating problem. They have a problem with the property sector. You cross through properties which should accommodate 10, 20, maybe 50,000 people, and they are completely empty. So there is a sector issue to do with China, and China has to rebalance its economy. America is putting a lot of pressure on China by not letting uh, American companies procure commodities from Chinese companies. In fact, I'm increasingly hearing that if there's a company somewhere else in the world, not in China, but is owned more than 25% by a Chinese entity, American government considers that to be a Chinese entity and creates problems for companies trying to procure commodities from that company. So I think despite all these problems, I think China continues to grow. I really enjoy how what I see happening with my eyes, despite pessimism of even the Chinese. So I think the future of commodities is very likely a lot more positive than what the market might believe it to be. Um, let's say Chinese electric vehicles. I don't even have a list of Chinese electric vehicles. There are probably 5, 10, 15, 20 Chinese companies producing EVs. There are all kinds of scooters and motorbikes that run on electric batteries, chargeable batteries. So China is really at the forefront of using the current technology for its practical purposes. So I think the Chinese economy is in a much better shape than everyone thinks it is. And as a result, the commodity consumption is likely to be better than what the market thinks. That said, Antonio, I prefer not to speculate on commodity prices, but I certainly want to speculate on the future of East Asian um, economies.
Do you think the growth in those economies is going to be anything like what we saw before? And why I'm coming at you with that question is because I'm thinking of technology, and back in the day when I was young, everyone around me used to have a Nokia phone. Um, and then now it's kind of switching, so people either have an iPhone or they have like a Huawei or whatever it might be. But a lot of people are still saying like, oh, or more and more people actually come across are saying, oh, iPhones are getting too expensive. I'll buy a Huawei or whatever it might be. A lot of Chinese brands that produce similar, sometimes better products for half or less than half the price, and that is most definitely the case apparently in EVs, based on personal experiences that I'm hearing and reading about online. Is that kind of the same thing that we're gonna see? Like back in the day, everyone had a Nokia, and now a lot of people are moving towards Chinese phones and computers and stuff like that. Is that gonna happen in other technologies like cars and stuff like that?
It can clearly happen, and it probably should happen. except that America and Europe is imposing a massive amount of import taxes on Chinese EVs. So I was in a Chinese taxi, and that is as big as Toyota RAV4. So it was an SUV kind of vehicle. And I asked the driver how much he paid to buy that electric vehicle. And he told me he paid 120,000 renminbi. That translates into less than 20,000 American dollars.
Hmm.
Now, that's an extremely good value. These are very good cars, and they seem to run very well. They have a lot of features. They are very innovative and creative in many ways. So I think if China was allowed to trade freely with the Western world, a lot of these vehicles will do extremely well and probably destroy the local markets in the Western society, local production facilities in the Western society. Now, Antonio, I use a Chinese brand of cell phone. I don't see a reason to buy iPhone or Samsung. I can get a much better deal and as many features with Chinese phones, really.
It's so I look at that as well. Myself, I use well, I suppose it's a Korean phone, but I use a Samsung that I've had for many years now. Um, surprisingly many years actually. I used to be an Apple consumer. I still have an Apple computer because it works with my editing software and stuff like that. But beyond that, you're right. I mean the performance on what I use my phone for, I don't need anything else, and I don't need to overpay for these things. So I will potentially also go sort of the direction of Huawei or OnePlus or something along those lines. Again, depending on pricing, I'm kind of a cheapskate myself. But you're right. These tariffs.
Well, Antonio, it's very important to remember the quality of these products. They are extremely good. A lot of Chinese, a lot of people associate Chinese goods with something cheap. It's not necessarily true anymore. A lot of Chinese stuff is actually very high quality. What I have seen over my travels in China is that the productivity of people is very good. The regulatory imposition on these people is minimal. So they can spend most of their time producing what they do rather than on dealing with the government or dealing with the tax authorities. So their focus is very much on productivity. I know a friend who applied for a driving license in China, and it took my friend less than an hour to go through absolutely everything. They want you out of their offices very, very quickly because they want you to get back to your desk and do your real job.
Hmm. Where did you go in China? I'm just thinking if that's really the situation everywhere in China, because we're kind of generalizing here, but maybe you just kind of got one glimpse of a very good city. So I mean, is that the reality in the entirety of China? Because I'm still seeing videos of
Oh,
bad stuff happening and stuff like that
oh,
online.
of course, of course. I mean, China is still a second world country. It is not. I'm not comparing China with the United States or with the United Kingdom. China is a second world country, uh, uh, and I have been to a lot of places in China. I have driven around China. Um, so yeah, there's still a lot of poverty in China. There's a lot of backwardness in China. What impresses me about China is not that it has become a first world country. What impresses me is that it continues to improve. People in China continue to want to copy Western ways and live the Western way um, of life. They not just materially but culturally and socially as well. They want to copy Western ways. So I see a continual improvement. So, for example, Antonio, simple things like when I first started going to China 17 years back, it was very common to see people spitting on the floor or see people not lining up, queuing up. But that is becoming increasingly rare. I haven't seen a person spitting on the road in the recent times. So things are changing, and that's what impresses me. So yes, it's not a first world country. There are a lot of issues left in China. They have to deal with those, but as long as there is an improvement, I'm very happy about it.
Hmm. What metals do you think then would make the most sense knowing that. I mean, copper is kind of the obvious thing. Copper seems to move with the expectation of what's going to be happening in China over the short run, or at least it has over the last year or two since I've been following it. But yeah, I mean, you're talking about technologies. What kind of other metals are we talking? Rare earths? What else?
Well, I don't know about what kind of commodities will do well because of this. There are a couple of things certainly happening, which is that China is rapidly increase its solar electricity, sun-based electricity production. Its consumption of coal could easily continue to fall. But that said, coal consumption outside China is increasing. It's we are currently using more coal than as a human population. We are using more coal than we ever did before. So I continue to be optimistic about coal. Irrespective of what's happening in China, China is really focusing on controlling its air pollution. So it's trying to shut down polluting factories. I have seen steel factories which have been shut down because they were not in areas that the government liked. They were polluting the city, so they have shut those things down. I think I'm more interested. So I don't like to speculate on commodities. The only thing that I'm very bullish on is gold. I think the world outside East Asia is becoming increasingly chaotic, and that's where gold will become a very precious, a really, really precious commodity going forward.
And I think that actually makes sense now that you're saying it, because what I've seen online, people like obviously arguing and making their own points, and people use China to make their own points, irrespective of what side of the energy debate they are on, because China just keeps getting solar capacity on and wind capacity and coal capacity, and they're building nuclear power plants. They're doing a lot in terms of energy, and I mean, that must mean something. So, like you say, I mean, China's still stocking up on coal. They're expecting a summer demand peak now. They just stacked up on coal last week, and they are doing these build outs in energy. So, I suppose expecting growth from there makes sense because they themselves are expecting more growth given the capacity they're building.
Yeah, and also, Antonio, going back to gold, I think Chinese have a higher propensity to buy gold today because they are not so interested in properties. They have faced hardships by owning properties. Their values have fallen quite a bit over the last few years. So they are very likely not speculating in properties as much. Property construction is not happening as much. So whatever new cash they are generating is very likely flowing into the stock market in China and also in gold. And that is why we have, on and off heard news about gold getting sold in China at a premium to the international market.
Hmm. But yeah, it seems like maybe their appetite is also coming from their central bank, which we never really know how much they're buying, but supposedly they're buying a lot. Um, but it seems like with the higher prices, maybe appetite is drying up a little bit. I know that's the case for India, um, although I might be hurting you when I'm mentioning India and China in the same sentence.
Well, I mean, it doesn't sound very good to me because these are two very different countries, not comparable countries, and their pockets have very different sizes, and their interests are very different. So, yes, in a way, you shouldn't be comparing the two countries, but remember, India will also be very keen on buying gold because India is becoming very chaotic politically and socially. So there's a huge amount of fear in the country. There's now, on the 1st of July, which is just 3 days back, India implemented a new penal code, which was a break from the British penal code. And now I was talking with a friend just before I started talking with you. He was arrested by the police yesterday because he made a wrong U-turn. Now, his case will go to the court. Now, that's absolutely crazy because usually a minor traffic violation should result into nothing else than a fine. But he will have to now go through the court system, which will last for anything between 10 to 20 years now, And if he wanted to be outside the country for more than a certain amount of time, he can't be, because the court visit will require him to return back to India. And this is just because he apparently made a wrong U-turn in a country where there is no actual rule book on traffic laws. So no one really knows what the traffic laws are. And you can always Google India Road or something and look for videos of Indian traffic. There's no way you can drive for even 10 meters in that country without violating some kind of abstract, unknown traffic law. So police can pretty much arrest people at any point of time. Really, what I'm coming to is that India is becoming a true police state. It's always been a police state, but now police can really arrest you on road for no reason whatsoever, because everyone is making some kind of traffic violation.
Jayant, you have some badass friends getting arrested and stuff. It's what do you think India is oftentimes brought up as sort of this demand hub for the next growth phase of the world? Do you think that's not going to materialize? And do you think we're going to see less demand for commodities out of India?
Yes, absolutely. India is not the reason to expect much growth in anything. India is a non-entity; it's a nobody country, and it brings nothing to the table in the international affairs. So yes, you should not expect anything from India whatsoever. The economy in India has been stagnating for almost 10 years now, despite all the crazy claims about growth in the country. There is actually deindustrialization happening in the country right now. Anything between 60 to 80 million people have moved back to rural areas from urban areas. So deindustrialization is happening. Economic growth is really not happening. I know there are claims about 8.4% economic growth, but I can in a couple of minutes destroy that number for the simple reason that Indian government is discounting the growth rate using only 1.5% inflation for adjustment purposes, when inflation is about 6 to 7%. That by itself tells you that there's actually no economic growth. And a lot of Indian growth has actually, for example, come from facts like India is now a mediator between Russia and Europe for oil, which is India is buying 2 million barrels of oil every day from Russia to send it to Europe. And that extra margin is accruing to India, but that is not a result of economic productivity increase. That's a result of just bypassing European sanctions. So I really don't see anything good happening in India. But more importantly, Antonio, what is actually happening in India is a massive increase in corruption. Now, this new penal code will lead to a whole new dimension of corruption in that country, where every single bureaucrat and politician is corrupt.
But they're increasing their energy capacity too. I mean, more people are coming on the grid, I suppose. More people are coming online from there, and there's a lot of people in India too, right? So maybe even a small increase could mean a big demand surge, especially in the energy space, then, right?
Absolutely, but I don't know if this will continue for into very long into the future, because the economy is suffering. People have to have the capacity to buy electricity. A lot of electricity is provided free of cost to people in slum areas, in villages. It's supplied quite often for free. So, can the government continue to provide free electricity to people? And often, sometimes these days, plants have to shut down because no people who are supposedly to be consuming electricity cannot afford to pay for it. So I think that India is very rapidly getting to a stage where electricity consumption increase will start to stagnate.
Oh, so you're thinking energy use per capita, for example, would have peaked, because that's kind of what happened to Pakistan. And I'm not trying to compare these two countries. I know that it's a little sensitive there too historically, but Pakistan peaked in, well, it's peaked in energy use, and now it's kind of flattening out. Whereas, I mean, to go back to China, China's energy use per person is now very close to that of the European Union. Of course, there's adjustments happening, and they're exporting, they export a lot and stuff like that.
That's
But
right.
it's,
Yeah.
I mean, it's a stark difference, if you will, in energy use between China and India, what we've been talking about.
Well, you should actually compare Pakistan with India, actually, because they are very similar people with very similar mindset and very similar trajectory of growths. So you have to compare the two countries and really see Pakistan as what India will be like in a few years' time. India will go through the same social problems that Pakistan is currently going through. Remember, Pakistan started becoming an Islamic fanatic country in the 80s. India started doing that in the mid 90s. So India is just about a decade or two behind Pakistan in terms of destroying itself. But moreover, Antonio, Pakistan's economy was mostly much better than that of India's until about a decade back. Pakistan was doing on a per capita GDP basis better than India, despite the fact that they have a bigger foe next doors. So at the end of the day, Pakistan's economy is something that I would be more optimistic about in the medium term than I would be of India's. So you should look at Pakistan as the template that India will be following in the near future.
I thought that like 80% of India is Hindu. I mean, yeah, in terms of religion, because you said they're becoming fanatics, but I thought most of the people in India are Hindus. No.
Yeah, but Hindu fanatics also exist, and they can be
Okay.
worse fanatics, actually. So, fanaticism is not only the game of Muslims, it's also a game of Hindus, and it can be a game of other religions as well.
Hmm.
So, India is not immune to fanaticism, and sometimes the fanaticism of Indians can be very arbitrary. And this is, again, increasing very rapidly.
Right. Okay. Sure. Knowing all these things, though, maybe kind of going back to the opening question here, what do you like? What does the portfolio look like? You said you're traveling across China a lot, but what does that mean for you? I mean, are you going into Chinese tech stocks, or are you still commodity focused?
Well, I'm very much looking at something outside the natural resource industry when I'm traveling in China, and those are property companies that I'm looking at. Property prices have fallen very significantly in China, so I'm quite keen on looking at property companies. For a couple of my institutional clients, I spend about 10% of my time looking at companies based in China, which are outside natural resources.
Okay. But so for you, for I mean, maybe for your personal portfolio, you don't focus on Canada or whatever's happening in the ventures exchange.
Oh, of course, in 80 to 90% of my net worth is invested in the Canadian and Australian stock exchange. So
No.
indeed, that's what I do. But 10% of my net worth is invested in outside the natural resources. And I also help my clients uh, to the extent of about 10% of my time in investing in the Hong Kong and other Asian stock exchanges.
What is that 80%? That's kind of what caught my attention when he said Canadian and Australian. Those are again natural resource heavy exchanges typically. What is that 80% split in? Like, well, what's the biggest focus there?
Well, most of those are small junior mining companies, development stage companies. So that's what I have done, and they still have to pick up. I have also invested a lot in arbitrage opportunities in the last 2 months. There are more mergers happening in the Canadian and Australian stock exchange than I have ever seen in the past. I see a sweet spot there where I can make 10-20% of my money within a couple of months' time. So a lot of my new cash has gone into arbitrage opportunities in the recent past.
Meaning you go out there and you look for what company do I think is going to get taken over at a premium?
Well, I always like to do that, but at the same time, I also have to understand that I can't always predict what will get taken over. But there are about 10 companies which are in the process of getting taken over. So this is already in the market news, public news, and there's still an arbitrage opportunity in investing the companies that are being acquired. So, for example, companies like Argonaut or Black Wolf Copper or Osino Resources or Base Resources in Australia or Adventus, there are about 7, 8, 10 companies that are in the process of getting acquired, and virtually all of them, I can see in my spreadsheet here, have between 10 to 16% arbitrage upside.
Okay, so you actually buy like a merger or an acquisition gets announced, Fission Paladin, and there's a, let's say whatever it is, 25% premium, but the stock moves only 5%. There's a 20% delta between that value, and so you buy Fission, and then it gets taken out, and then you profit that way. Am I getting it correctly?
Absolutely. So Fission is a part of my spreadsheet here. There's only about 4% arbitrage in there, so I'm not going to buy it right now. But yes, that's exactly what I do. I wait for, I look at the arbitrage difference, the merger, the delta that you were talking about, and I buy based on that.
But that's, I mean, how big of an opportunity is that really? Is that not a little bit like maybe picking pennies in front of a steamroller? And what I mean by that is that we talk about this China growth theme. There's many other growth themes for commodities while there's a supply deficit. So, everybody's kind of expecting a rip your face off rally in commodities. And so if you focus on these arbitrage opportunities, isn't that like, again, picking pennies in front of a steamroller?
Oh, that's lovely. Picking pennies means that if you're picking pennies in front of the steamroller, means that I have zero cost and only an infinite times profit on that cost. But remember, Antonio, if you have about 10% arbitrage upside on something that might get closed in less than a month, and if you can annualize that profit, which means that you move from one place to another, you generate about 150% annualized return. So these 5 or 10% arbitrage upsides can actually do you a lot of good. The problem with waiting for a 10 bagger is, and a lot of people I know wait for 10 baggers. The problem is that the question always is, why is it not already 10 times the current share price? Is this because you don't know something that you should be knowing? Have you missed out on something? Does the market know something that you don't know? And all those kind of things. So instead of being greedy, which does not mean I don't invest in those kind of companies, that they are most of my investment portfolios. All I said was that all new money that I have is going into arbitrage opportunities, because that's where I think I can make some safe money, which keeps me going even if the market is stagnating.
Right. What part of your portfolio do you devote to that?
Clearly at this time, just because I have sold some of the companies that went up too much too quickly, I generated a lot of cash, and currently I think about 20% of my portfolio is invested in arbitrage opportunities.
Okay, so still a decent part is kind of chasing alpha. Really, what your career has been. I mean, when you worked with Lobo Tigre, that's really what he does, right? He's chasing alpha. He's looking for the stuff that people have not found before. So yeah, I mean, you're still chasing alpha basically in the market.
Of course, yeah, absolutely. Yeah, I really like to think that I know more about certain companies than the rest of the market, and there's a discrepancy between the value of those companies and the market's perception of the value of those companies. And Antonio, I have done reasonably well chasing that alpha that you are talking about.
Yeah. Well, what are you looking for when you chase alpha right now? Is it a specific commodity? Do you start sort of bottom up at the asset level? What are you looking for?
I do bottom up analysis on every company that I invest in, and what I'm looking for is a value that I come to, which is much higher than what the value based on discounted cash flow, and using the spot prices of metals. If I come at a much higher value than what the market is valuing it in the stock market, that's what I'm interested in. But also these very small companies, Antonio, and this is what we were talking offline before you started recording. A lot of these junior mining companies are facing huge problems raising money. So their share prices have suffered hugely because of lack of access to cash that they have. And if I think there's value, I want to do two things. I want to help them raise money, and I want to invest a lot of my own money in those companies so that I help them get the money they need.
Okay, so when it comes down to the Lassonde curve, what part of the Lassonde curve are you looking for that value in right now?
I don't look at the Lassonde curve. Lassonde curve is something I disagree with. I think you can look at that curve in retrospect, but it does not help me look forward into the future. So it does not help me in any way whatsoever. But in terms of what kind of companies I invest in, these are mostly less than $50 million companies who have at best a development stage project that is still going through feasibility study. There are huge risks involved in those projects. And then a lot of those companies have projects where all they have is drill holes, and there are no resources, but then I can start calculating my own back of the envelope resources on those companies, and and hopefully be ahead of the market in terms of understanding what's happening with those projects.
But you don't go into pre-discovery companies like pre-drill hole companies.
Oh, I do invest in those companies. So yes, again, everything is based on valuation. Everything. If I think that company offers me um, a value for their projects, for their market cap, which might be, let's say, there could be a company whose market capitalization is a $2 million, and supposedly they have pre-discovery projects on which they have a joint venture agreement with a major, on which the major might invest $5 or $10 million. I can very quickly do a basic primary school math to see that the major geologists of the major see enough value in that project to invest $5 or $10 million for 50 or 70% of the project. So the attributed value of the ownership that my company would be left over would be then much higher than the market capitalization. So yes, I do those kind of companies as well.
And this goes back to what you just said about financing, because that's one way to finance, I suppose, where the company does asset level dilution instead of equity dilution. That's worked well for me with Awali Resources. Fair disclaimer, and honest confession, I still own a lot of it, so I am biased there. But what do you and it's kind of controversial, right? I mean, you have again the world is kind of split on it. Like, is that a good thing? Is that a bad thing? Most people don't want asset dilution. Like, I still get a lot of pushback from people saying, "Oh, Awali is only going to end up with 25% of that asset." But 25% of something is way better than 1,000% of nothing, right? So that's kind of how I think about it. How do you think about it?
These days, currently, Antonio, it is much better to dilute your assets rather than dilute your shares outstanding. And the reason is very simple, that the junior mining companies, these small mining companies who are looking for projects or discovering in the discovery phase, are very undervalued. They are facing a huge problem raising cash. So they are so undervalued that if they dilute their equity, they are more likely to dilute uh, on a per share basis ownership of those assets more than what they would dilute the assets by diluting away the assets directly. So, for example, if a company has a project that it owns 100% of, if it has to raise 100% of its market cap worth of shares uh, to keep the project going, remember, on post share basis, you will have still lost 50% of the project. So if you can get away without diluting 50% of asset by optioning it to a major, then you are better off. So it's all about math on these companies. But currently, there's virtually no company that I know which is not undervalued um, uh, based on the fact that majors would probably uh, give them better value.
Any names that you care to share with me?
Well, two companies that I, again, not only gave a lot of my money to, but brought in a lot of money for. One is Irving Resources in Japan, and another one is Aztec Minerals. Irving Resources is IRV in Canada, and Aztec Minerals is AZT.
Hmm. Okay, interesting. On Aztec Minerals, someone else just told me about it yesterday. I believe, yeah, yesterday. Okay. And that's across metals. Like you don't have a metals preference at all. You're like, okay, I need to find copper deals right now or something like that.
No, I don't drive myself based on looking for a specific metal, because mining is not, you find what you find. You don't really go looking for a commodity to buy and then find something. So no, I'm not. A lot of my portfolio is actually either multi commodities, as Adventus has been, or Black Wolf Copper, for example. But for whatever reason, a lot of my investment has been focused on gold in the recent past.
Okay. That it just happens so like you're not doing this from any ideological gold buggery.
No, I'm not, except that I am very keen on coal companies, Antonio, and this is something we talked about last time as well, I guess, if my memory is not wrong.
Right.
Coal companies are trading at fabulous valuations. They are generating a 20%, for example, profit on their market capitalization. They are giving out 10-15% of that, 10 to 15% of their market capitalizations in dividends. And they are sitting on billions of dollars in cash. So these are billion-dollar companies with huge amount of liquidity, trading at virtually a fraction of what they should be trading at, because big funds cannot buy those companies, and banks won't offer them cash for development purposes. So if they have a lot of billions of dollars sitting in their treasuries, then I'm very happy to buy their stock and just forget about them. And I actually have forgotten about all my coal stocks. I haven't followed them for the last 6 to 8 months now.
What's the what's the plan for exiting liquidity there though? I mean, if nobody can touch these stocks and people get yeah, I mean, the media is constantly hammering it in your head that you shouldn't touch anything that has anything to do with coal or oil, even though that's what we're all constantly doing. I mean, yeah, what's the plan for exiting liquidity there?
Oh, I'll probably die with those stocks in my portfolio if they continue to be what they are. If I make 10 to 15% of my share price in dividend per year, then I don't have a reason to sell them. I will just those shares will just sit in my portfolio forever. So there's no reason to exit them with that kind of valuation. And I actually think that coal will continue to be in fashion for at least 10 to 20 years. So I will make a good amount of profit from these companies. And eventually they might actually go down to zero, because coal will cease to exist as a commodity of use. But then I will have made a multiple of my investment worth, and they will then have returned me a lot of cash that will have been sitting in their treasury as at that point of time. So I'm not too worried about my coal portfolio. They have done very well for me. They have consistently given me dividend for the last 2 or 3 years. So I'm very happy with that investment.
Initially, I intended to ask you about uranium, but now that you're saying these things, I would assume that you would say, oh, there's not much in uranium for me to get exposure to. But then at the same time, it kind of seems like it's getting boring in the uranium space. I mean, the content around uranium has also dropped down a little bit. It used to be crazy for a while. So is this getting a contrarian opportunity?
Not necessarily. I think I have a very negative view of uranium, and I have held that for a very long time, Antonio. And I really think uranium electricity generating plants for the future, and I'm talking about the new ones coming on stream in the future, is a dead man walking. Because sun-based energy is becoming extremely cheap, and it will become reasonably cheap over the next 10-20 years, that constructing a new uranium power plant probably does not make much sense for anyone. uranium power plant, electricity generating plants don't have a huge cost once they are constructed. But in a regime where nominal interest rate is about 5-6%, it is extremely difficult to invest in capital for uranium electricity generating plant. So I'm negative about it. Also, I think uh, the locals don't like uranium projects because they are always afraid of Fukushima happening next doors to them. Now, I'm not saying uranium is necessarily risky, but the perception is what matters, because if the locals don't want it, it does not go ahead.
Well, perception is changing rapidly, though. I mean, you talk to anyone here in Western Europe, it is changing very rapidly, and that's also what the polls are showing, even in Germany, where the again, just perception is growing for is improving for nuclear projects. And also a lot of countries are building them. I mean, we hear about a new build out or initiating of a new build out, or something within the laws of a country changing the laws positively toward uranium. And even if nobody build any more nuclear power plants, we still have enough demand to not only cover supply but go above supply, and that's what's happening. So this is more of a supply shortage thesis that's happening in uranium, that has been happening. I mean, again, you've been not so positive on uranium since we really started talking maybe a couple of years ago, but uranium has still done well since.
I agree.
So
Yeah.
yeah, how do you reconcile that?
Well, again, I can't foresee the future of any commodity. But at the same time, I don't necessarily think uranium has done all that well. When I started working in the industry, uranium was about $150 per pound. So in 17 years, on adjusted for inflation basis, that price should have been more than 250 or $300 per pound. So it is still trading at a fraction of the price that it was trading at 15, 17 years back. Now, of course, everything falls and then it can go up. But to what level it will fall before it starts going up, I cannot predict. But I completely agree with you that I have been wrong about uranium over the last 2 or 3 years. And I would have been better off had I bought uranium companies 2 or 3 years back. So that's absolutely true. And again, I can't see the future of any commodity. I just see the larger picture to do with new electricity generating plants. And I also agree with you that the current projects will continue to function and they have to be fed with uranium supplies. And if there's a shortage of supplies for those uranium projects, the price of uranium will go up to meet that demand. So again, I completely agree with you. I don't have that math done well in front of me, so I prefer not to speculate on it. I just think in terms of that massive construction of uranium project, electricity generating plant that people think about, I don't think that's going to work out in the future, just because any new construction takes about 15 to 20 years to come online. And our technology of sun-based energy is getting better so rapidly that it probably does not make much sense to invest in new uranium electricity generating plants.
I don't know how good it actually can get. I don't think I share that view going forward, because and this might turn, I don't intend it to turn into an energy debate, of course, but um, just nuclear power plants is so much superior. And you talk about China. China is pumping them out in 6 years instead of 20 years. I mean, a lot of people give Vogel as an example in the U.S. that was mismanaged in unimaginable ways. So countries like China are doing it way quicker and much more efficient. Um, but solar energy it's just not gonna cut it. It's not baseload power. We need baseload power, and that's why I think a combination of coal power plants and nuclear power plants is kind of the way to go for baseload power, and then supplement that, sure, where it makes sense. I mean, does it make sense to have it over here in Belgium when the sun mostly doesn't shine, even during the summer? Not sure. I mean, we have clear example of what happens when you do that in Germany, for example. So that's it's a long story. I appreciate your opinion on uranium, though, and I appreciate you being open about it, about what's happened in the past. What about, let's maybe switch the focus here a little bit. What about stuff like graphite? I recently interviewed a few graphite companies, not by any skill, mostly by luck. People suggested a couple of graphite companies to me, and they're like, okay, you should talk to this one and this one. So I talked to them, and just this week I caught wind of news that Rio Tinto has increased its ownership in an ASX listed graphite miner. Um, Specifically by the name of Sovereign Metals. Not that that matters too much, but they increased their ownership in this company to just under 20%. So do we have a silently emerging bull market in graphite? What do you think?
Oh, I have no clue, Antonio. I'm not invested in any graphite company. I haven't looked at a graphite company for years now. So I'm a bit outside the current trend on that.
Anything else that's kind of obscure that you maybe looked into that you think like, okay, this is a silent bull market, like nobody's talking about it, but it's kind of moving up slowly but surely?
I think we have talked about the two things that I'm very optimistic about. One is coal. People should look at these coal mining companies. Do not invest in coal junior mining companies because they are worth zero. Uh, Look at coal mining companies and look at the gold price. I think gold price has a lot to go up to.
Yeah. Okay. I'm always interested in kind of people's crazy ideas, like something that is like neodymium or I don't know, diamonds. I mean, they're not that obscure, I suppose, but the diamond bull market seems to never have come back, and so stuff like that. But I mean, there's nothing obscure that you're in.
I have nothing sexy in mind.
Good. Well, what else? What else should we be talking about here, Giant? There's I've gone through most of my notes that I took up front. What am I forgetting to ask you though?
Again, I think arbitrage companies are something to look at. And actually, contrary to what I said earlier, I'm actually well invested in uranium companies as well. Uh, and that is through because I'm invested in a couple. I've been invested in a couple of arbitrage opportunities to do with uranium. One company that I think people might want to look at is Base Resources. It's a company that is an Aussie company that is merging with Energy Fuels, which is a major Canadian company. And there is this morning there was a 14% arbitrage in upside in owning Base Resources, which trades on London Stock Exchange and Australian Stock Exchange. And this is something that is very exciting, Antonio. Whenever there's a cross jurisdiction merger, the arbitrage tends to be much higher than when there's a transaction happening within one jurisdiction, because people are afraid of whether their brokers would be able to switch to another jurisdiction that easily or not. So if you have a brokerage account that automatically converts your one jurisdiction shares into another jurisdiction, that's something to look at, and I think that's where some of these mergers can be very beneficial.
With Fission and Paladin, that's a cross jurisdiction merger as well. But I believe Paladin is getting a Canadian listing in that case.
It is, and the arbitrage is only 3%, and it just changed from 4% to 3%. So there's not much arbitrage right now. It can actually increase as we get closer to the merger date. Again, because people wait for the merger date to come closer before they start panicking. So I will wait for a while. I'm not going to invest in FCU until the arbitrage is at least 8 to 10%. But again, you are 100% right. Because Paladin is intending to list in Canada, people will look at it very differently than they would if the merging entity weren't going to be listed anymore in the jurisdiction it is currently listed in.
Yeah. Well, thank you, Giant, first of all, for investing time in me. I'll let you go now. Again, many ways to go with this. I'm kind of chatty today, but I still got 3 interviews to get to. So I'll let you do your thing. You have controversial opinions, which I appreciate different views. So thank you for stopping by. And it's jayantbhandari.com for people who want to know more. Again, I'll let you drop off now so I can jump into my favorite part of the CEO barbecue here, which is as always, I said I was chatty and now I'm forgetting how to speak, but it is, as always, the disclaimer. There's, for people listening and watching, you should not only be listening, of course, you should be watching. There's a warning on your screen right now that you're obligated to read, not because someone else might spank you, but because if you don't, you might lose your money. So if you don't enjoy losing money, read the disclaimer that's on your screen right now, because I'm here to make money. This channel exists. I make money from the existence of this channel, and specifically of the fact that some of the companies you're going to see on this channel have paid for the production of their interviews. Most of them don't, because most of them, anyways, I'll tell you more about that in a second. But in this case, specifically in this episode, specifically, Alaska Energy Metals is a paying advertiser on this channel. You're going to see them more on this channel each time. Just assume everyone's biased. But even the companies that are not paying, they're still likely seeing their participation in this program as a chance to do some marketing. So start by understanding that that's the case, but also that most company communications online, albeit or offline, could be conferences or whatever else, albeit interviews, presentations, Twitter accounts, those are marketing tools, okay? And although I don't make buy or sell recommendations because there's a clear conflict of interest, many out there will do that. And you should be aware of that inherent bias. There's a lot of Twitter accounts, oftentimes anonymous, that make buying recommendations or talk stocks up without disclosing that they're being paid. So just be aware of that bias. And it's safer for you to, anytime you're watching or consuming any type of company specific content, to approach it with a dose of healthy skepticism and just treat it as marketing. That's it. And again, although I try to look more in depth into these companies and ask some questions, I don't give the companies the questions up front. That's one of the main rules. There's really 3 rules to the resource talks interviews. There's no questions up front, no questions off the table, no editing rights, which is the reason why most companies don't want to pay for these, unfortunately. But anyways, these, even though that's the case, these things should still be looked at as advertisements and not as research, and least of all as recommendations, okay? Unfortunately, my crystal ball broke a very long time ago when I lost half my money, so I don't possess any superior knowledge about what will go up, what will go down, and what is going to go in circles. And as a one of my favorite historic figures said, I don't care if you're Jimmy Buffett or Warren Buffett, nobody knows where the stock is going to go. So no guarantees here. Besides that, there will be forward-looking statements. I can guarantee you that there are going to be forward-looking statements in these conversations. And also, I can guarantee you that those are conversations that are general and impersonal in nature. They are not targeted to you specifically. Those conversations are going to contain hopes for the future and events that may or may not take place, depending on many different factors that are both within and outside of the company's control. Be aware of that. Be aware of the inherent risk to investing, the inherent bias to company-related content online, and the increased risk of investing in the mining industry, especially through a liquid investment product, which most junior stocks out there are going to be. And please talk to a professional investment advisor, as well as do more research before taking any decisions. And you can do that on setterplus.ca. That is a government official website where you're going to find the company's official filings, like the MD&A, the financial statements, management information circular, tech documents. Go and read those. And there are disclaimers on your screen right now. As I said, if you don't enjoy losing money, read them. And be careful out there. With all that said, though, I'm kind of getting tired of listening to my voice, and I have to do this company overview now. So I'll kick off the CEO interviews with by going to the US, actually, since it has been a while, although not much reason to celebrate, I suppose, since I am going to Alaska, which isn't the best beach vacation destination, but it's got pretty much the same weather as Belgium has been having over the last couple of months. But apparently Alaska's not a bad place to look for nickel. And to tell me more about Alaskan nickel, I have Greg Basher and Tyrone Breitenbach of Alaska Energy Metals. The company is listed as AEMC on the TSX Ventures Exchange in Canada, where an average of about 250,000 shares trade each day, with a 52-week high of 82 cents and a 52-week low of 13 cents. With a market cap of about $13.5 million and about 90 million shares outstanding, today this is a 15-cent stock. There are 17.5 million warrants and about 4.5 million options, leaving the number of fully diluted shares at about 115 million. Management and insiders here own about 6% of the company, and Vancouver family offices own about 15% of it, leaving the rest in the hands of the market. The last financial statement, which is dated March 31st shows me $3 million in current assets, most of which $2 million to be specific in cash and cash equivalents, and about 700 grand in prepaid expenses, as well as some marketable securities in the form of Felix Gold shares, which are listed on the ASX. I don't see any long-term debt, but I do see about $500,000 in account payables and accrued liabilities. That same financial statement from March also tells me that on average, over the last reported 3 months, Alaska Energy recorded about $700,000 a month in administrative expenses, mostly in the form of promotion and investor relations, which is a significant increase over the last period. So I hope we can get an update on that later on in the conversation. As to the exploration expenditures, exploration and evaluation, there was a total of $600,000 that was spent on the asset over that period, mainly focused on the Nikolai project. That's the main focus here. That's a project that we'll discuss later today. So that brings us to about $200,000 per month on average. And that means that in terms of ratios, about 75% of the total cash burn rate went into administrative expenses and 25% into exploration and evaluation. But as always, though, I would like to remind listeners that this financial statement is nothing more but a snapshot in time, in this case, specifically at the end of March of this year, and it really only covers 3 months of the fiscal year. And the finances will have changed by the time you're watching this, partly because this is a non-revenue generating company, so they have to burn cash to survive. Partly also because exploring in Alaska is a seasonable business, and partly also because they're currently working on a financing. So please head over to the company's website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. That all said, the main part of one of the main parts of that picture for Alaska Energy that I'll be looking into today, as I mentioned, is the Nikolai project. That's a project that's again, it's in Alaska, as the name suggests, southeastern Alaska, and it contains a range really of battery metals from nickel. It is mainly nickel, but there's other stuff in there. So there's copper, there's cobalt, there's platinum, there's palladium, and there's even pet rocks here in the face of gold. Nikolai has a recent resource estimate on it showing the potential for a very large open pit mining operation containing almost 4 billion pounds of nickel in the indicated category and over 4 billion pounds of nickel in the inferred category. That's not nickel equivalent, by the way. This is just a nickel, which with an equivalent calculation jumps to almost 5.2 and almost 5.5 billion pounds of nickel equivalent in the indicated and inferred category, respectively, with both categories showing about a 0.3% nickel equivalent grade, with the nickel alone showing 0.2%. So again, it is mostly nickel. That resource is, by the way, only built on 43 drill holes, 8 of which were drilled by AMC themselves, and the majority came from historic drilling, which the company believes indicates that there's much more potential in this project, which is why they plan to keep drilling it. And hopefully I can get an update on that, as well as they're expecting to add more inferred tonnage to the southeast of that project and come up with an updated MRE by the end of Q1 of next year. But that plan might have been adjusted just a little bit over recent past, as they have signed an option agreement to acquire another nickel project in Quebec. The company seems to be somewhat restructured as well. So hopefully that is something we can discuss later on in the conversation. And well, again, first of all, I want to understand what the plans here really are, because, gentlemen, you've gone through again a bit of a restructuring. You're adding a new project in Quebec now. So what's going on? What's the game plan here?
Well, we're still focused primarily on the Nikolai nickel project in Alaska, Antonio. The recent option agreement adds to an asset that we actually picked up last year in Quebec. It's a secondary project for us, but we really like it, and we're bringing it along. So it's early days yet. We've just now working on the first pass surface work, soil sampling, and then airborne geophysics on the Anglais project in Quebec, which targets high-grade nickel.
Okay, so that's happening right now in Quebec?
It is, yeah.
Okay, good.
And just to elaborate on that, I mean, Quebec gives us another front of news flow while we're waiting to access Alaska. But Nikolai is the reason everyone's involved in this project. So I am one of the new board members. I think we're adding 3 new members to the board as a as a bit of a restructuring associated with this financing. And all of the new board members have, I think, a really strong track record in capital markets, in building real tier one stories, and also on the transaction front. Because what's interesting about this project is, I think the appeal is initially going to come from industry. It's going to be the Samsungs, the Anglos, the BHP that actually need the metal, that are less worried about what the nickel price is doing today, that are willing to invest counter-cyclically and understand that there's very few of these things of scale in the first world. So Nikolai is the reason we're here. Quebec gives us another front and hedges our bets a little bit.
What would a potential shareholder get out of this board restructuring, by the way? What's the so you're coming on the board, Tyrone, but talk to me about who else is coming on the board and what's the what are they going to do? Why are we getting them on board?
For sure. So I guess my background is I'm a geologist by training. I actually started with Anglo Platinum in South Africa, where I worked underground at the Bushveld complex. And when I looked at this project 18 months ago, that's what I saw, was this massive multi-kilometer long trend, fractionally crystallized chamber of mafic magma that was developing these beautiful layers. Like, the first thing that jumps out at you in this presentation is the continuity. And I think if you don't have grade, you got to scale and continuity, and this project has that in droves. So I like to think that I've got a good mix of rocks and stocks, so kind of helping to communicate the geological opportunity to the market. Greg and his team have the geology down. Some of my co-directors that are coming on include Mario Vitro. So I've worked with Mario on a couple of deals, and what I like about Mario is he's really good at raising capital. He's a hustler. He's a grinder, and I think this company needs that. He connects us to the right capital and the right people, and can help drive buying in the market. Because when you're a junior, you got to fight every day for that volume. Paul Matisek, I wouldn't say I'm super close to, but we did cover him at Cormark, and I think he has a fantastic track record of selling assets. Right? I mean, if you look at his bio, he tends to come in, de-risk a project, make it appealing to a major or industrial player, and then help with the exit. Ian Stalker, kind of a similar bio. I think Greg's had an opportunity to kind of liaise with these new director elects. I mean, they aren't on the board until the AGM concludes, so we're not directors yet, but we've all kind of put up our hands and want to roll up our sleeves and get stuck into this opportunity.
So is that the main business plan? De-risk it, get someone interested into it, get a major in, or would the business plan be? Because earlier you mentioned that the interest primarily is going to come from industry. So would the idea be for you to get money from, say, the Samsungs or whoever else it might be and build it yourselves, or do you want to sell it?
So I'll give my view and then I'll hand it over to the CEO. So I think that 40, 50-year mine life nickel assets in the first world are rare as hen's teeth, period. Okay. Right now, the nickel backdrop is not very optimistic. There's a massive amount of supply coming from Indonesia. You're seeing articles every day, though, questioning the, ethicalness of this supply. I'm not going to weigh in on that, but I do think the world needs a first world supply. And I think the challenge Alaska Energy Metals has, and it's one of the reasons we're changing the board, is the total value, of this deal is significant. It's going to be in the billions of dollars of NPV, but that's going to come with a big capital tag as well. And here we are, a little double-digit microcap explorer, right? That has a tiger by the tail, but our capital needs are like many multiples of our equity capital. So our goal is to de-risk as much as possible without killing ourselves on dilution. And I think the right partner for that is an industry partner. And a good example is Canada Nickel, right, which has a larger project, but I think we're heading in that direction. Very similar grade. I think each project has its pros and cons. I mean, we have a low strip, I think. That company has attracted Anglo, Samsung, and Agnico Eagle, strangely enough. And being in the US, we also get to take advantage of the IRA, some of the government bodies that are created and exist only to fund a project like that. So I think the cost of capital is much lower from these industry players. And then if we de-risk it, and generate enough exploration catalysts, we can kind of bring in the conventional investors. So in my mind, our goal for the next 18 months is get too big to ignore, but limit equity dilution. And that's something, you know, Greg and I think are aligned on, but I'll throw it back to Greg in case I've missed it.
No, ultimately, this project, I think, is probably only for some of the bigger mining companies in the world. It's not that we don't have the technical capability to take this project a long way down the road, but even in advanced exploration, the capital needs are going to be quite significant. So I think it only makes sense to start bringing in strategic partners fairly soon. And now that we've published a resource, well, we're starting to get interest from strategics. So I think it just makes sense to make partnerships, but at the same time, I think we'd like to be selective about that and make sure that we get the right partner for an Alaska project.
Does that 18-month plan include you having a PEA by the end of 2025, or do you not think that's necessary?
I think it's definitely a necessity. Whether it's possible by the end of 2025 will depend on capital primarily.
But you still do want to go for an updated MRE by Q1 of next year?
Oh, certainly, yes. But that just takes a few more drill holes, really, to significantly add to the tonnage and probably increase the grade.
And so just on that, I mean, you were mentioning the number of drill holes. I think the number is 18 or whatever it is. Yes, it's a limited number of drill holes, but you're getting ore or above cut-off grade interceptions basically from collar to end of hole, right? So this is very efficient drilling. Like it's you've got continuity on your side, and that's why this resource has grown so quickly.
Yeah, it's pretty amazing. To get an inferred resource, we only need to drill it on 300-meter centers because it is so homogeneous, so continuous, so regular. And for indicated, 150-meter centers is adequate. So, you know, I think you need to think about this bulk tonnage deposit much like you'd think about a bulk tonnage porphyry copper deposit. I mean, it's a very large volume of rock, uniformly mineralized, disseminated sulfides.
You said you need just a few holes. What would that look like specifically in reality? How many holes do you want to drill?
Yeah, just 2 or 3 holes on the southeastern end of the Eureka deposit would add significant tonnage, especially combined with a couple of historical holes. From those historical holes, we know that the deposit extends to the southeast, and we've got a good handle now on the higher grade core zone. So we would target that higher grade core. So it does 2 things for us. It increases the size of the deposit, but it also increases the grade.
Okay.
And I have a very high level of confidence on that, Antonio, because of the couple of sparse historical drill holes, but also surface samples that document the higher grade core extension to the southeast, and as being so predictable a deposit that our confidence level is quite high.
Because that would have been my follow-up question, because you mentioned wanting to get the grade higher, and the grade here is not that high. I mean, it's 0.3%. It's going to fall on the lower end of grade of grading. I understand it's a bulk tonnage target, and actually this might be a good point first before I ask the other question. But I'm just now thinking of this. Do you need higher grade for this project to be able to move forward, or do you just want it? Like, would the economics make sense if the grade stayed 0.3% equivalent?
So I mean, we're all talking conceptually here, right? But Canada Nickel, which has, I think, a $250 million market cap, has an average grade of 0.25%, I believe. And grade is really important. Like, grade is king. But this reminds me of when I started at Detour in, it was a long time ago, maybe 2006 or something like that. And a 0.9, 0.8 gram gold deposit was unthinkable. right? But no one was building 75,000 ton per day mills. And so when you have enough of the stuff, right, and you can use the biggest shovels available, and the recovery is good, and the recovery is good at low grades, it just becomes an engineering exercise, and you can engineer a margin. So yes, it makes money. The question is, can it sustain the capital? Okay, and at today's nickel price, I think it's on the edge. Probably works. But over a nickel forecast over the next 5 years, God forbid the next 20 or 30 years, which will probably be the mine life of this thing, I think it's very, very economic, or a very interesting proposition. And that's a challenge, right? Is the stock market, I think, prices stocks based on the nickel price today. And so, our audience are going to be guys that want to invest, guys and girls that want to invest counter-cyclically. But there is a problem with the grade. And then in addition to our sort of average grade of 0.3 equivalent, there are higher grade pits, right? And some of these high grade zones are going to have no strip. I think life of mine, the resource pit shell envelope was 1.5 to 1. First couple of years, it could be less than 1 to 1. First year, it might be 0, right? So that's going to be a factor as well. So yeah, we need to go and do the PA to prove all these numbers. And by far the biggest driver is going to be the nickel price. So I think operating costs, no problem. It's just, can you sustain the capital, because there will be a lot of capital here.
Okay, but so for you to get more grade, you don't necessarily have to go deeper either, because Greg, you mentioned you're going to do it along strike.
Yeah, no, not at all. I mean, the deposit comes right to surface, and as I mentioned, we're almost positive that the high-grade core zone, which itself is 90 to 100 meters thick, will extend to the southeast, because we've got surface samples right along strike that show that. I don't know if it's really necessary for us to drill to make the deposit a lot bigger, but I think it makes great sense to increase the grade by focusing on that high grade core. We might have a big enough deposit just within that high grade core for a pre-feasibility study, but we need to flesh that out further. Focus on the higher grade portion.
Right.
And then something else, what we're talking about grade is, so we're focused on this chamber that's very continuous and bulky, but there are other settings in the same camp that have surface expressions of much higher grade. And so there's a slide in the deck on the Canwell block. So I'll get Greg to talk about that, because that could add another element to the story, instead of just this sort of homogeneous, continuous but lower grade blob.
So essentially, what is it going to take, like 1,000, 1,500 meters of drilling?
Correct. Yes.
To get to an updated MRE, basically.
That's correct. Yes.
Okay. Right. Okay. Well, I'm going to talk about cost later on, to kind of sum up the entire cost of what you want to be spending money on. But it's maybe topical to it was just a week ago that we got news that the Biden administration is blocking an important proposed piece of infrastructure in Alaska in the face of what is it, an over 200-mile long road. So let's maybe start off by talking about the jurisdiction and how safe you guys think it is in the context of you having to drill these holes. So first of all, are you permitted, and how do you foresee permitting in Alaska in the future?
Sure. I think our project, Nikolai, is very permittable. We're on state-owned land. The state is very pro-resource development. It has an efficient permitting process. For the exploration work we're doing now, we have a 5-year exploration permit in place. So that's no problem. Then we go at some point we'll go to mine permitting, where things become more advanced. But there's no highly sensitive ecological features to the area. It's near a road, but not too close. It's not too close to any population center, so it's sort of tucked away in a hidden corner, and therefore I think a very formidable deposit. In Alaska, the hot button topic often is salmon. As you know, we have tremendous runs of salmon that come from the ocean up the rivers to the smaller rivers to the creeks where they spawn. And if you're proposing to build a large open pit mining operation in a salmon spawning area, you're going to have a hard time. But fortunately, there's no salmon on our project, or for that matter, for at least 80 kilometers downstream. So that makes permitting a mine operation a lot easier.
What about the local populations and natives and stuff? Like you mentioned, you just mentioned that you're kind of tucked away, but are there's no native lands over your project? So like, how does that work, given that it's in the U.S.?
Well, one of the great things about Alaska is that the land claims have been settled for over 50 years. It is a great model, maybe, that the world could follow, in that they formed 12 regional corporations. And each of these business corporations has done very, very well. We're not on or near native-owned lands, but the native corporations of Alaska are business savvy, and they have business subsidiaries that can provide service to us, environmental assessments, civil engineering, road construction. So it only makes sense for us to have good business relationships with Alaska Native corporations, and we do. I mean, we're Alaskans. We've been here exploring all over the state in prior companies, and so we have good relationships with everyone in Alaska, whether it be suppliers or politicians or Native corporations.
Right. Okay. So you have the permits. The locals are okay with it. You have the money. You have the plan. You know what you want to drill. When do you go and drill it?
We're, as of yesterday, already drilling on the Canwell block of claims, where we've got some spectacularly high-grade surface mineral occurrences that I've been wanting to drill for a long time.
How long is it?
Something I've sorry, Antonio, this is not something I've mentioned yet, but our company is only just over a year old, but I have a very long history with this project. My early career as a young geologist was with Inco out of Sudbury, Canada, which at the time was the largest nickel mining company in the world, and they sent me here to Alaska to explore this exact project. It was a really grassroots green conceptual idea at the time, but we did discover nickel, and we discovered these high-grade occurrences in the mid-90s, and did a little bit of drilling, but didn't really do it justice. And so now we're back again, and I'm really excited to be drilling these high-grade targets. We've done the geophysics now that underscores the potential and really shows the targets that we've now just begun drilling.
You're reminding me of maybe an important question here, because you said you have a history with this project. Are there royalties on the project, and does management own any of those royalties?
The main block, Eureka, where we have the bulk tonnage deposit, is free of royalties altogether. We're 100% owners of the claims. At Canwell, it's an option agreement from a prospector, and there is a royalty on it, a rather stiff 3% net smelter returns royalty, but it's fully buyable at our option at any time. The purchase price is $9 million to purchase the entire royalty. And so I would imagine at the verge of a production decision, the company would elect to buy out that royalty. So it would be royalty free. $9 million won't be a lot of money if we've got a great big nickel deposit going to production.
Does management own any of that royalty, or is the prospector related to the company in any way?
No, unfortunately, the prospector passed away last year, and it's now owned by his sons. But no, no one associated with the company owns the royalty.
Right. Okay. So yeah, to go back to the drilling, you said it's not a lot of drilling. How long is it going to take you to drill those 1,000 or 1,500 meters?
Yeah, to be clear, Antonio, we're first drill the Canwell prospects. This is separate and distinct, but nearby the Eureka deposit. The potential at Canwell is more for high-grade, massive, rich sulfide ores. These are the Canwell area represents sort of the feeders to the large magmatic intrusion that hosts the Eureka deposit. And at Canwell, therefore, high grade is more likely. But then on top of that, a little bit of drilling at the Eureka deposit would result in an extension, probably a grade increase upon calculation of an updated mineral resource estimate.
Okay, so what you're drilling right now, you don't plan on including that in the updated MRE then, or are you?
No, it's a distance of about 20 kilometers from the Eureka deposit, and this is only the first pass. It's the first good drill holes into highly compelling geophysical targets, but it's really about an exploration discovery story at Canwell.
Okay. When do you go back to Eureka?
Hopefully later in the summer, early fall.
There's an exploration season, as I mentioned, in Alaska. How long do you have to drill those holes?
Yeah, it's right now it's early stage exploration is most efficient between May and the first week of October at this particular location. It's not that we can't go longer, it's just becomes more problematic and expensive. So right now we stick May till October, but once we go into delineation drilling and we have full road access, then certainly we'll extend the season substantially. And then, of course, in Alaska, all of our mining operations are year-round mines.
Yeah. When it comes down to mining operations, as far as I understand, it kind of works differently. But as you mentioned, for exploration, that's also what I'm getting from other people, May to September, October, late September sometimes, depending on where you are in Alaska. Good. So how much money is all that going to cost? And does that include any of the other work? You mentioned the metallurgy is clean, but do you have to do any more metallurgical work before the updated resource, or how do you look at that?
Yeah, absolutely. And certainly before a PEA, and that's part of the use of proceeds is advancing our understanding, the initial understanding of the metallurgy. We know we've got the right mineralogy, that the nickel's in, most of it is in potentially recoverable forms. Nickel sulfides or nickel iron alloys that are readily recovered, but we need to do that initial bench scale testing and plug that into the equation.
Okay. With that, how much money are you going to be, or how much money are you budgeting for Alaska this year?
Yeah, our total raise here is 4 million Canadian dollars, so roughly 3.2 US. And that'll form our budget for the work and in drilling and metallurgy and general overhead.
That you're gonna have enough money to cover all that?
Yes.
Okay. So you're, because at the beginning you said it's capital dependent. Your next capital raise then is just, it's not going to be this year for sure.
Right. So the amount that we can drill to extend the Eureka deposit will depend on how much capital we raise in the current financing. For sure, we're drilling 3 holes at Canwell. And like I say, that work's already underway at present.
Right. Okay. You've I'm trying to better understand how financings are going to work in the future, because that can always be a bottleneck for juniors where you have your market cap is low, but in order to push your market cap up, you need capital. So what's the general strategy?
So I would say by showing higher grade at Kenwell and by continuing to advance strategic discussions, I think that could generate the value increase to raise funding at a higher level. So we're going to be raising capital like every pre-production company for the foreseeable future. Our job as management board is to do it at higher and higher levels. Something else I'll flag is that this financing we're doing now includes a warrant, and that warrant is almost viewed as a sort of pre-designed financing. So we hope that warrant get exercised. So this gets us through the end of the year. Hopefully we can add a lot of value. Hopefully we've got a better nickel backdrop. Macquarie's kind of called a low, so that's one notable call out there. And then reassess the value proposition and the dilution math early next year.
Yeah, sorry, Antonio. I think the approach right now is to limit dilution, but yet raise enough monies that we can do things that could seriously move the needle. And a high-grade nickel discovery at Canmore would certainly move the needle. A significant expansion of the Eureka deposit and an increase in the grade can move the needle. But we're mindful of that dilution at the same time. We haven't touched on it yet, but I think that our company has an excellent chance of receiving government funding. We've applied for government funding up to $29 million US. And in the next 6 to 12 months, we'll know the answer of whether we'll get that money or not. I think we have an excellent chance, though, and certainly that could move the needle to accelerate all our work and seriously reduce our average cost of capital. Yeah, this is expensive capital that we're raising right now, but if we're successful in our grant applications, then the average cost of the capital over the course of our short company history will be quite low indeed.
You have, I've heard you mention that before in interviews, Greg, that there's potential for government support and other partnerships. But let's maybe start with that government support, though. What would financial support look like specifically? Would it be a grant or a loan or something? Like, how would that work?
We've applied for 2 different grants. Well, one is essentially an appropriation that our congressional delegation has requested from an agency of the U.S. Department of Defense, and that would be for $4 million. We'll know an answer on that one, I'm sure, within 5 or 6 months. The other one and sorry, I should say that $4 million would be a straight grant, no match required. The other grant is more advanced that would take the project a long way down the road. The application was for $25 million, and it would be a matching grant. The amount of the match is somewhat to be negotiated. It may be 50%, but it may be less. We may only have to contribute 25 or 30% to the overall match. So it would be very significant were we to receive this grant funding. Yeah.
Well, that would be significant, to put it mildly. What about getting potential partners? Yeah, go ahead.
So, sorry to interject, Antonio, but there's good precedent. Graphite One, an Alaska company that has a very nice graphite deposit in Western Alaska, last year received a grant for $37 million to do their feasibility study on the project. So there's definitely interest. We have very strong support for critical and strategic metals with our Alaska congressional delegation. We have 2 senators and 1 congresswoman that represents us in Washington, D.C. And Senator Murkowski, in particular, has been pounding the table on critical metals. She knows how vulnerable the United States is on supply chains, and she's been doing her best to convince all of her peers in Washington, D.C., that this is the case. The country really is vulnerable, but Alaska could supply so much of the critical and strategic metals that our country needs. And so she's been a great proponent of critical metal development in Alaska.
That'll be interesting to see. I recently spoke to Talon Metals as well. They're far away from you, but also in the US, they're getting some money as well. Higher market cap, although they're also struggling to get the story out to the market given the state of the metals prices for nickel. But interesting nonetheless. Greg, you've also mentioned the potential for getting partners on. We kind of brushed upon it at the beginning. What would that look like? And when is a good point to maybe, do a little bit of maybe asset level dilution instead of equity dilution?
Yeah, I think in the coming 12 to 18 months, I think it makes sense to bring on a strategic partner. And so perhaps we give up a portion of the project in return for our capital that allows us to advance into the PEA stage.
And one of the ways to do that, Antonio, is Sandstorm used to do these deals with the royalties. No one wanted to sell a royalty before they had made a discovery or before they had drilled their best target. So they would often do equity in exchange for a ROFR on a portion of a royalty. So at least Sandstorm would know, well, if there's ever an auction, we're at the front of the queue. We're not getting a worse deal. Yeah, exactly. If there's a deal to be had, we're at the front of the queue. And so the big trading houses, the big OEMs, they want the metal. They don't care about equity. They don't even understand equity. But I think they're learning that so much of the supply is at exploration, pre-production stage that they have to invest in the equity, and so they're coming around to it. And I think what the guys at Canada Nickel did with Samsung was brilliant. Obviously, that project is further down the road, but that might be one way to do it: is to dangle a ROFR on future nickel offtake or a portion of the nickel offtake.
That's exactly what my follow-up question would have been. Like, what would that look like specifically if you get a partner? One option is, again, get a royalty or a streaming or something along those lines. But yeah, not the only option. So if you just get a straight partner, what would you be looking to give away? Like, would you be looking to give away 75% of the asset in exchange for them paying for all the drilling up until you get it into production, or like, well, just give away a little bit? What would that look like?
I think it's too early days to really see, but certainly we wouldn't be giving away 75% that easily.
Yeah, I almost felt like I hurt you when I said that. I almost felt like an arrow to your heart. While on the
very politically correct in his answer there, yeah.
While on the topic of money, gentlemen, I'm starting to better understand where you might try and get the money from, but I also like to understand where and how you will be spending it outside of exploration. And so, as I mentioned at the beginning, a big deal of your administrative expense, which was to note, it was about $700,000 a month on average. Let's maybe talk about that. Big part of that was marketing, but I mean, that seems a little high. Is the plan to keep G&A around that level, or would you want to get it lower?
No, and the first quarter, that is a small snapshot in time, Antonio, and doesn't accurately reflect our overall expenditures. January to March of this year was primarily doing the bookwork to calculate the resource, but we did have a big marketing push towards the announcement of our resource. So we announced that resource at the end of February, and we did, do marketing to be ready for the publication of that resource. And so it's just how it worked out. There was marketing bills coming in from the prior year, and there was a marketing push in the first quarter. And that's why the expenditures are skewed that way. But overall, over the course of the company's history now, 14, 15 months, we put approximately 15 to 18% of our funds into marketing. That's still a pretty big number, but it was done on purpose. We're a new company. We wanted to get our name on the map, and we also wanted to appeal to a younger generation of investors, investors who like tech, like electric vehicles, and to help them understand that it's these raw materials that make those things possible, and that ultimately it comes back to those raw materials. So that's how partly that we expended that marketing money as an education to a different non-traditional mining investment community.
Tyrone, how do you look at marketing it as someone who's got more well, no, you actually bring a good combination of capital markets and geology because you're a geologist, but you have a very good view on marketing, and you've gotten a good view on marketing over the years. How do you foresee the marketing future of the company?
Well, I think the best performing stocks, and let's look at Great Bear. You know, you got to have a good asset to stock, right? Like, you shouldn't be marketing if you don't have an asset you believe in. But the biggest driver in whether these stocks are going to be, you know, multi-baggers is managing dilution. Okay, and if you're hiding under a rock and you have a great asset and you're not presenting it in the right way, then you know, you're disadvantaging your shareholders. And so if there's a better use of proceeds, like if there's a great drill target, we should go and drill the target. But it sounds like Greg had finished the drilling, they were doing the resource, and they need to increase awareness. And I believe before I got involved, AEMC, it was a totally different company. I think it was a gold prospect generator. You know, Greg was able to acquire Nikolai. You know, basically was in his encyclopedic memory from his Inco days, or Sudbury days rather. And so you had a big turnover in shareholders, right? Guys who were owning a prospect generator. Now you're a nickel developer, so you're going to have a lot of churn, and you have to manage that stock and try and put it into the right hands. So I think for the stage of the company, 15 to 18% is totally reasonable. And I think a lot about Integra, which I covered as an analyst. You know, that was one of the best performers in like a really tough, crappy gold tape, right? And Steve DeYoung told me when the market goes down, he hires a third IR person because now it's twice as difficult to find that one investor. So to me, the spend, as long as you're accountable and you're looking at the ROE, like is it working? Are you increasing awareness? Is the messaging correct? Are you driving volume? Like if you're spending the money and not getting any volume, then it's time to stop, right? So, you know, these things should be accountable for sure. And that's something I think the board's going to watch. But yeah, I'm not going to defend, I am going to defend marketing. I've no problem with it. And I think it's an important job for any, you know, swashbuckling junior company until you get the audience.
That's what I was going to ask about how you measure the ROI on marketing, though, because looking at the share price, it kind of stayed flat between January and March, and then it kind of went down after that big spend. Volume was increased, though. So is that kind of how you think about marketing? Because the volume was noticeably higher in that period. It's just that the price didn't move up a lot.
Yeah, I think we got rid of a lot of the Mulrock guys. I think there was a big churn from, you know, historical shareholders, and you know, headed into this summer, nickel, the nickel macro hasn't been great, and I think we would have been in a lot worse shape without that. And then, of course, you get to the point where the market knows you need a deal, okay, and so nobody's stepping in and buying the stock. You know, maybe they're even playing games. Although I don't want to bring up the boogeyman of the Canadian short seller. I don't think there's like naked short selling, but I think people are just like not buying the stock or know you need money, so they're going to sell it and buy a warrant deal. Right. So I think people are leaning on us into this financing. We announced the financing. The stock's been gaining ground since we announced the financing. So I think we need to rip this Band-Aid off. It was expensive capital. We thought long and hard before we took $4 million, right? Like we could have raised a lot more, but it's always a balance. I think $4 million is the right balance, especially if you put it with the right people. You know, this was a 55 cent stock earlier this year. So I think just a couple of green shoots in the nickel market. Hopefully some good drill results, and I think the guys who bought this deal could have an interesting trade.
Okay, so with that, how much money are you budgeting then in total for G&A? I mean, what do you expect it to be on average per month? Again, as I said, Greg, you said it's not representative, the 700K, but so where is it going to be?
No, we target in between 15 and 20% as the amount directed towards marketing.
No, I mean the overall G&A burn per month. Where do you see it for the year?
Marketing at around 15 to 20%. And then overall G&A, it costs us around $150,000 per month to run the basic company.
Okay, yeah, okay. Well, that sounds better then, because again, at the beginning I said 700. It's good that you're explaining that to me now, because I had big eyes when I saw that at first.
Yeah.
Yeah, I don't think you can annualize that number. I think if you're going to do that, you got to at least look at 4 financial statements.
Yeah.
Yeah.
Good. What maybe to go back to the director part, there's something that I wanted to ask, but it might be better fitting here. Are the new directors going to be compensated with cash, or are you going to load them up with options? What is that going to look like?
So I'll start by saying I put some money into this deal. I'm pretty sure some of the other guys are as well. Greg probably knows better than myself. And I actually don't know. This is going to be the first time I hear what the package is. So shoot.
Right. No, there'll be stock-based compensation for the new directors that are coming on board. I'm really thankful for the 2 directors that are stepping off. They've done a great job with us, but as this company's advanced, we do need more help with capital markets, and that's what Tyron and Ian Stalker and Mario Vetro bring to the company. So we're mindful of cash. There's a very modest stipend to directors in cash, but primarily they're motivated to help with stock-based compensation.
Right. But there is a base component of a salary, or is it just
No, it's not a salary. It's just a very small stipend.
Okay. Yeah, fair. Good. I think I'm getting the gist of it here. That's where I was going with this, by the way, Tyrone. Like, obviously skin in the game. You've got new guys coming in. What's their deal? Like, you told me what the company is getting out of it, but what are your guys' plan with the company? And so you mentioning skin in the game there. Do you typically operate as a company that does open market purchases as well? And are you going to do that in the future?
Look, I mean, I'm not a filer. Well, I guess I'm a filer now because I haven't been on the board. I've just been an advisor, so I will be a filer. I do own, some stock. And look, the most money some of my best trades have been picking up world-class assets in a commodity that's completely unloved. Because when the nickel price is in the toilet, everything gets washed out, right? This company's new. I think people are obsessed with grade, and I think, over the next 2 to 3 years, there's going to be a window, just like there was a year or so ago, where people are scrambling for nickel projects, and there's 4 tickers you can buy. And we're in the US, and we have a wonderful CEO who lives in Alaska, who's known about this project for decades, who's perfectly competent and technically savvy to move it forward. And so to me, this is one where I'm swinging for the fences. I also feel like I can be somewhat helpful given my background in the Bushveld complex, and I see a lot of analogs here. And I think people have already painted us as a low-grade bulk tonnage story, which in the right market could be amazing. But I think we could surprise them with some big high-grade results, not just at Canwell, because these chambers are like, think of a big rock chamber, right? And the floor of the chamber is not equal. It's going to undulate, and there are structural features. And so we're not seeing a lot of resolution here. Our holes are 300 meters apart, right? As we increase the resolution, my gut tells me that the average grade goes up and the number of high-grade pockets go up. It's a resolution story. So the more we drill this, I bet you the better the deposit gets. That's the bet I'm making, and I love being non-consensus. And so right now everyone hates nickel. Let's have this call again in a year and see where we're at. Yeah.
I think we should have this call much sooner than that and talk about the geology, because you're tingling my curiosity there. Maybe we can get Kyle on and have both of you guys on, and Kyle, and just have a lengthy conversation about the rocks and just generally try and understand what is this system there, and spend I don't even care. We could spend 2 hours talking about it. I'll still find it interesting. But this has been a good company overview. What am I forgetting to ask you though, gentlemen? Anything you want to add here?
Yeah, I think we can, in the geology discussion, we can definitely touch, Antonio, on the overall concept of bulk tonnage sulfide nickel deposits. I often get pushback on the grade, I though just make the comparison to the change that the copper mining business made 50, 60 years ago when it migrated to mining porphyry copper deposits instead of high grade veins and volcanogenic deposits. Yeah, I'm sure there was lots of naysayers then that didn't believe a porphyry copper could make money. But now it's like almost the sole source of copper, and we're starting to mine very, very low grades of those copper deposits. If you look at the bulk value of the metal in the Nikolai deposit and convert it to copper, it'd be roughly a 0.8% copper porphyry, which today is a spectacular grade. So I am convinced that large volume bulk tonnage nickel deposits are the future of nickel mining globally. I think we have a decent chance of finding a high grade massive sulfide deposit at Nikolai as well, but these are really rare discoveries. I mean, the last globally significant massive sulfide nickel discovery was Voisey's Bay over 3 decades ago now. So there's no way that our nickel industry can ramp up to meet double-digit annual demand for nickel by seeking out and discovering only high-grade deposits. The industry will be forced to mine bulk tonnage, and I think we'll find that they're actually very profitable, like the industry did with porphyry coppers.
I'm going to say one more thing I don't think we covered is if you look at our neighbors to the north of us, and I believe they picked up the ground after we kind of debuted, is cobalt. Correct me on the timing if I'm wrong, Greg.
Yes, yeah, they came along afterwards.
But cobalt, I mean, I don't know the company really well, but they've been able to raise a lot of money from a non-conventional mining audience. They're applying AI and let's call it quantum computing to satellite data and I assume they're using different spectrum of light, geochemical assays. So, there's a pretty smart, well-capitalized group in our neighborhood, and they're only shooting for world-class assets, right? And so we're not the only one looking at these districts. And this is a district, like you can see it from space. So we are swinging for the fences, and I think that's part of the company's DNA as well.
Yeah, well, thank you, gentlemen, for sitting down with me today. There is indeed a lot more to talk about. I do want to get into the rocks, but I feel like if we start talking about it right now, it's going to take us at least another an hour and a half, and I still got what do we have? 2 more interviews to go through. So I guess I'll let you gentlemen drop off, but we are going to do that geology deep dive interview sometime in the future. So for now, though, again, thank you so much for investing your time in me. I will be moving on as I'm going to have to travel to 2 places at the same time. So I'm kind of staying in the US, but I got to go down south to Arizona. But I'm going to be at 2 places at the same time. So that being Brazil and the US, because I am after battery grade graphite. It's a market that I barely understand. That's not even safe to say. I don't understand this market. So I need more explanation. And I'm going to be getting it from Richard Pierce, the CEO of South Star Battery Metals Corp. Companies listed as STS on the TSX Ventures Exchange in Canada, where an average of about 16,000 shares trade each day, with a 52-week high of 82 cents and a 52-week low of 49 cents. With a market cap of about $30 million and about 52 million shares outstanding, today this is a 58-cent stock. There are 27 million warrants and about 2 million options and RSUs combined, leaving the number of fully diluted shares at about 81.5 million. This is largely a retail story as it stands today. It is a little under 60% of the company is in the hands of retail investors, but management does own about 10% and institutions own about a third, call it 33%. The last financial statement shows me $10.3 million in current assets, most of which, $10 million to be specific, was in cash and cash equivalents, and is about $300,000 in prepaid expenses. I don't see any long-term debt, but I do see $1.4 million in account payables and accrued liabilities, part of which is in related party transactions. That same financial statement, which is from March 31st, by the way, of this year, also tells me that on average, over the last reported 3 months, Softstar recorded about $385,000 a month in administrative expenses, mostly in the form of consulting fees, management fees, professional fees. There's travel, there's marketing and stuff like that. Not much was spent on exploration and evaluation. I typically make that ratio where it's exploration to administration. This is not an exploration company, though. So over that period, there was just about $63,000 per month on average in the form of property costs. And again, just an obligatory ratio, though it doesn't make too much sense here. But in terms of ratios, that means that 85% of the total cash burn went into administration versus 15% into exploration and evaluation. As it always is, though, I would like to remind listeners that this financial statement is nothing more than a snapshot in time. In this case, it was specifically at the end of March of this year, and the finances will have changed by the time you're watching this, partly because this is currently, as of yet, a non-revenue generating company that is building an actual mine, which is a capital-intensive process. So please head over to the company's website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. Now, when I say currently building a mine, I really mean adding the finishing touches to a mine, because Softstar has just completed a build out of their Santa Cruz project in Brazil, with commercial production expected here in Q3 of this year, so very, very shortly. It will be a phased build out, though, so the facility will start slowly, so with 5,000 tons annual capacity and 94 to 96% graphite concentrates, and move to 25,000 tons capacity and up to 97% concentrate by 2026, to then ramp up fully to by 2028, which would be a 50,000 tons annual capacity, but again up to 97% graphite concentrates. This is an open pit, non-blast, non-drill operation, so simple flotation processing too, and the mine is expected to operate for 12 years and deliver a total of $129 million in post-tax free cash flow for that entire 12-year period. Again, a phased approach, so the capital will be spent in steps. Part of it is already spent, of course, with phase 2, though, being estimated to cost $27 million, resulting in a 4-year payback period for the total capex and a 35% post-tax IRR. This is, by the way, the first all-new graphite mine in the Americas since about the time I was born, so almost 30 years now. So that's Brazil, but as I indicated, they also have a project in the U.S. in East Central Alabama, specifically, that goes by the name of Bama Star, really. So no O. The name comes from Alabama, not from Obama, hopefully. And that project is expected to come online in 2027 in a phased approach as well. Only there, phase 1 is equivalent to phase 2 of the Brazilian project. So they're going to kick it off with a 25,000 tons per year capacity off the bat and up to 97% graphite concentrates, with phase 2 expected to reach up to, again, 50,000 tons per annum and, again, 97% concentrates, which then in combination with Santa Cruz would put Softstar at 100,000 tons annual capacity, with the goal of also adding midstream to downstream products like battery graphite or for lithium-ion batteries and other, call it enhancement products. And the studies to test that potential are already underway, but there's not too much specific that I can give you. So hopefully I can get to ask some questions later on. So it seems like we're talking at the right time here, Richard, and it seems like you have good ideas for the future of this company, but none of it comes cheap. Again, with phase 2 in Brazil requiring $27 million in less than 2 years from now. Although part of that is, I understand, is financed under your stream agreement with Sprott, but then we also don't exactly know the capex for the Alabama project. So hopefully we can talk about that. But that will come on top of that, basically. So let's maybe start there. Where will the money come from for this build out?
Sure. So, we look at this as trying to be smart capital allocators. And Antonio, thanks for having me, by the way. Appreciate the opportunity to speak with you, and nice to be here with you and your audience. So we look out across the space and kind of see who's actually making money here, and it's companies that have a broad range of products that they can sell into a variety of sectors and client bases. So there's been a lot of capital destruction. And the unique thing about Santa Cruz is that we start making money right off the bat. Most of the other projects that we keep in our database, which are about 45, actually, don't make much economic sense, except when they're looking at the value add component. So different than a lot of plays out there, Brazil has been producing graphite for 80+ years. There's some inherent benefits in that it's mostly a large flake deposit, meaning that as concentrate, being 94 to 97, maybe 98% grade concentrate, we can sell that at very good prices compared to what our cost is going to be. So when we look at financing phase 2 and phase 3, we're working through taking our PFS and updating that into a feasibility study. I kind of look at it as, phase 2, by the time that we get around to it, it'll be around 35 million, of which Sprott will provide half of that. One of the main reasons why we approach it the way we approach it is that industrial metals is very different than precious. So, if I have an ounce of gold or a pound of copper, I know that I can sell that tomorrow at the spot price. So the way that we're phasing production, meaning at phase 1, we'll be producing about 1,000 tons a month. I will have a balance sheet. I will have clients. I will have prices. I will have cost. So when we look at it, we think about debt financing will be very achievable for us. In Brazil, there's development bank financing. In the US, there's the DFC, the Development Finance Corps, which are different debt financing mechanisms. And really the question gets down to cost of capital for us. So we're in conversations with both the Brazilian Development Bank, the DFC, private lenders, and on top of that, we'll have sales. So when we look at, saying, well, I want to sign an offtake for maybe 3 to 5 years and get, $10 million as a prepayment on that offtake, we'll be able to look at financing basically phase 2 and phase 3 in a very non-dilutive fashion for existing shareholders and being able to do that at a very low cost of capital. So again, when we look at, say, phase 2, which will be around 35 million, we'll install all of our infrastructure required for phase 3. And then it's a modular build, meaning that everything will be skid mounted, pre-assembled, pre-mounted, brought out the site basically mostly on skids, dropped into place, and then we just have to connect it. So the idea is that when we put together our engineering around phase 2, phase 3 is nothing other than just a copy paste of phase 2 with the infrastructure basically ready to go. So again, we would look at financing phase 2 with some debt as well as some prepayments on an offtake and maybe a little bit of equity around that. And phase 3, basically, we think we can finance again with a little bit of debt and out of cash flow. Right now we'll basically be putting a couple $1 million in the bank on phase 1. By the time we get to phase 2, we actually cover all of our expenses, including corporate G&A and studies and other things. So again, I think we'll be able to finance this without too much difficulty. We've raised about $60 million bucks in the last 3 years between Sprott and other financing. We've been able to do that in a very non-dilutive fashion. Last couple of raises have been done without a warrant, basically straight up, and in fact at a premium to the share price. So we've got a good group of solid core investors, good institutions behind us. Being where we're at in terms of development, we've basically de-risked the project from an operational standpoint. And that's, again, the idea of allocating capital intelligently. We want to be able to put things into production and scale, and we'll scale when clients come to us and say, yeah, we want some more of that.
I do want to talk about what those contracts look like and how much money you're bringing in with those contracts, because as far as I know, there's not much you have communicated to the market yet, maybe because it's sensitive. But I want to leave that maybe for the later part of the conversation. So, but you're saying that's the build out in Brazil to get it to phase 2, phase 3, but at the same time, you're doing a bunch of work in the US as well. I mean, you still have to get your PA out, I suppose. So those are costs as well. Is that going to come from equity raises? Is it going to be a combination of debt as well? How do you look at that? So
the PEA basically will be out in the next, let's say, 30 to 45 days. We're advancing, nicely on that. Geology's done. Mining is underway. They're working on CapEx, OpEx, sequencing, those types of things. So that's already basically money in the till. And when we look at, the sequence here, the US DoD through its Title III program has allocated 3.2 million US for half of the upcoming feasibility. So on Bama we'll basically go from a PEA straight into a feasibility study. And when we look at Santa Cruz as well, we'll go from the PFS to a feasibility study. So again, what we have coming up is basically take our feasibility, our PFS in Brazil, update our reserve and resource statement. We'll be doing about 4,000, 5,000 meters of drilling, looking to expand our resource reserve base, basically incorporate phase 3. The phase 2, the PFS was phase 1, phase 2. And then, our PEA will be, approximately about 1 million Canadian, which is already in our current budget. And as you mentioned, we had 10 million Canadian basically at the end of the quarter there. So when we look at the feasibility study, again, we're allocating about 7.5 million, of which the U.S. Department of Defense will pay about half that in arrears. So again, you basically spend your allocated capital every quarter. They'll reimburse us for the agreed upon expenses. So it's just a working capital question. So overall, it'll be about 7.5 million for the feasibility at Bama which the Department of Defense will pay half. We've got about 3.5 million allocated towards the feasibility study once we kick that off for Brazil. And again, we'll be cash flowing basically almost done with construction. We got about a 6 or 7 week construction window, and then we'll be ramping up to about 1,000 tons a month in Q4 of this year. So between what we have in cash flow that'll be coming in, we feel like we're setting ourselves up for a lot of really exciting times for us in 2025.
Are you guiding anything in terms of capex for Bama Star?
Yeah, we're not guiding anything at this point. Our goal really is to get the PEA out here in the next 30, 45 days. And once we have those results out, we can speak to them more specifically. But again, if you look at the plan is a phased approach. So we're, again, trying to be very disciplined about how we allocate capital. The plant for the mine, which again is 25,000 ton per annum, more or less. Again, that will be very, very similar to what we have in Brazil. And again, the idea is that it is modular. It is the same suppliers. So when we look at our engineering, it's the same equipment. The only real difference between the two deposits, Antonio, is around the weathering profile. And that's really what drew my attention to it initially. Very, very similar host rock, very similar mineralization controls, et cetera. So when we looked at it, the main difference really is what would be required around the front end, around the crush grind circuit, as opposed to the back end, which happens, downstream of there. So we've got about, anywhere between 20 to maybe 30 meters of oxide ore, a transition zone, and then into fresh rock. So as we work through the mine sequencing, we think there'll be a good opportunity for us to mine the oxide ore initially, which will be very similar cost to what we're doing in Brazil. CapEx will be a little bit more expensive, but again, the idea is that if we're using the same suppliers and setting things up so that we can keep our O&M simple, our planned maintenance simple, our inventory simple, take our expertise from Brazil, bring that to the U.S. Again, the U.S. doesn't currently have any graphite production whatsoever. So the opportunity here is to be the first mover in the U.S., spinning things up. The PEA will incorporate the value add component as well. So we'll take concentrate, which has, let's say, anywhere between 92 to 97% grade concentrates. We'll purify that. Our first products would be purified micronized, which can be used for a variety of alkaline battery, lead acid battery, heat sinks, those type of applications. The value add plant will likely be located somewhere around the port of Mobile, where we can basically transport or concentrate from Bama Star, as well as receive concentrate from Santa Cruz via the port facility there. There's good rail facilities there. So what we're looking at is basically, again, a phased modular construction in an existing industrial park around the port of Mobile. And we should have those results out in the next 45 days.
Do you think, to go back to what you just mentioned, that the US doesn't have domestic production of graphite? Do you think I mean, maybe you think it, but do you realistically expect the government to give you any money in building, in growing the plant, not in building the plant? Because I understand you told me that they're going to give you half of that money there, the 3 million. But I'm talking about by the time you get to 50,000 tons per annum capacity, are they going to carry some of that cost? Does that seem probable?
Yeah, I think when you look at, I like to call it energy transition, as well as defense application. You know, graphite is an unbelievably important component within defense, within technology, within the energy transition. If you look at all the main, let's say renewable energy sources, be it wind, be it solar, some of the others, they all require battery packs. If you look at communications, I mean, one of the largest consumers of wearable lithium-ion batteries is the military. So when you look out across the space, you see a lot of demand that isn't even really much considered in any of the projections. Being that the geopolitical situation is what it is, China currently produces around 70% of all the global graphite concentrate and nearly 100% of all the upgraded material. So when you look out across the critical metals and having, a critical component like graphite being 100% sourced in Asia, that's a problem for a lot of jurisdictions. So provenance of supply, security of supply is extremely important when you're talking about the current geopolitical situation. So I think the DoD has a lot of intent towards near-term production. Again, as I said, if you look at the U.S., there's 3 projects currently within the U.S. that have a defined resource and reserve base. One of them's in Alaska and 2 of them are in Alabama. In my humble opinion, I think the only real economic graphite zone in the U.S. is in Alabama, for a variety of reasons. But that's, I think when you look at the infrastructure, the ability to be smack dab in the middle of one of the most important defense, car, aerospace regions within the U.S. There's 18 gigafactories around us. You've got NASA right down the road, and you've got a lot of defense contractors that are set up here. So I think Alabama, with add surface mineralization, very low strip ratio, a very proactive state that's trying to attract industry. You've got all the main reagents that we need very close at hand. You've got $130 million R&D battery facility being constructed at the University of Alabama in Tuscaloosa. So I think there's a lot of positives in the state of Alabama in that southeast corridor. You've got Toyota, Volkswagen, Honda, Ford, GM, all building significant hybrid and EV facilities nearby. You've got 18 gigafactories being constructed. You've got a situation where we're short. Current demand for natural flake graphite is about 1.4 million tons per annum. Half of that goes into kind of value add sectors. Half of that more or less goes into meat and potato industrial applications. we're short 6 million tons basically by 2035. So if you look at, an average size mine today in the world is somewhere between 35 to maybe 50,000 tons of concentrate. We're short about 90 mines. Santa Cruz is a perfect example. We discovered the project in 2010. We're putting it into production in 2024. On average, it'll take anywhere between 12 to 15 years to work through the geology, resource reserve definition, permitting, licensing, engineering, construction. So there's a big lag between when new supply can come online to be able to meet a growing demand. And I think that's where we've got a fantastic opportunity at Santa Cruz is we make money selling concentrate. We'll make more money producing value add material. And we've got scalable assets in tier 1 jurisdictions that are coming online. So again, our first production is scheduled in the US for 2027. I do believe that the DoD and the DOE, the Department of Energy, are there looking for real viable projects that could be profitable. And that's really what we're trying to do is we've got scalable assets that are economic, very low capital intensity. We're able to permit, for example, in Alabama, we're able to permit this at the state level, different than a lot of the other projects out there. I don't have to deal with the Army Corps of Engineers, EPA, et cetera. So the idea is to start small, scale production as the markets require us to do. So again, I think it's realistic for us to stand up Bama Star plus the value add plant by 2027, which is kind of where I believe that the DOE will be there with low-cost loans. The DoD will be there with grant money, and whatever it is, maybe a couple times a month, you see them funding a variety of different projects out there at different levels, and us being basically putting out our PEA at this level, we'll be able to talk to metrics, compare ourselves to everything else out there, and basically show how we think Bama Star is a special opportunity.
You're kind of using the same blueprint for the two projects, as you said, though. What I'm thinking is you're saying they're similar in geology, but what I'm thinking about is labor cost and labor availability. Naturally, that's going to be different between
Yes,
Brazil and the US, I assume.
Yep.
So how realistic is that you build the US project as quickly as you built the Brazilian project? Because that's kind of the time frame you're going for with, right? Because right now you just told me 2027. That's what your presentation says as well. So how realistic do you think that is?
I think it's very realistic. Again, I think the US is wanting to put 100 to maybe 150,000 tons of concentrate into their strategic inventory. You've got the EU saying similar things. You've got Canada saying similar things. You've got a significant momentum towards provenance of supply and making sure that there is not 100% dependency on one point of production. And so I think the way that we're approaching this, and that the engineering will be consolidated, the equipment suppliers will mostly be the same between Brazil and Alabama. We come from, my group comes from an operational, standpoint. So we know basically where to beat your head against the wall, and we've beaten our head against the wall many, many times. And so the goal is to basically take advantage of that experience and be able to set these things up quickly, and using, very strong partners that can supply this equipment both in Brazil as well as in the US. The engineering companies that are doing our project design in the US will be the same engineering company and the same teams that are doing our studies in Brazil. And again, we're approaching, particularly the project in the US, we're approaching this from the idea of probably doing an EPC so that we can go quick. So we're talking with strong construction companies that have the ability to take our feasibility study and give us a turnkey solution so that we can go fast. Again, it may cost a little bit more, but the idea is that we go fast we become the first to market with the first product, with the first production, and are able to kind of meet these growing requirements. So I think 2027 is very doable. Again, I don't think it's an absurd amount of CapEx in this phased modular approach. The difference is that we'll have, again, than any other graphite company basically out there, we'll actually have a balance sheet and a P&L and clients and costs that a bank can look at and say, okay, these guys are actually making money in Brazil. They want to do this in the US. We've updated the study for US cost and labor. We've updated the studies for power cost, et cetera. So again, I think it'll be very easy for banks to kind of get a clear understanding of what we're trying to do and a level of comfort about our projections. Again, I think my expectation is that we have a very, very strong chance being the first mover in this space and being able to attract significant funding, both from the Department of Defense as well as Department of Energy. And again, the loans that overall have been publicly disclosed. It's SOFR plus 1 or 2. It's a couple-year grace period, and it's 7 to 10 years, 12 years to pay it back. So within the grand scheme of things, I think there's lots of opportunities out there to get very, very low-cost capital for teams that are really execution-driven, and you can scale up as required. The idea is not to have a bunch of capacity that's sitting there idle. And again, I think one of the strong differentiators for Southstar is, with very, very few exceptions, there's not a lot of breadth and depth of graphite operations experience out there. And Brazil's got 80 years of producing graphite. We've got technical folks that have been making graphite for 30 years, selling graphite for 20 years. And the idea is that we take that expertise and ability that, of putting a mine into production and operating it, bring that to the US again, so that we can just go faster.
So if we're talking here in, let's say, 36 months, so 3 years, it's 2027, it's mid 2027, will you be able to tell me, Antonio, no more share dilution? Like, we're not going to raise any more capital ever again? Or do you think that remains part of your financing strategy going forward?
Antonio, I guess, again, I look at it as trying to find the lowest cost of capital with the highest returns on investment. So if, that's equity, that's always an option. If it's debt, it's always an option. Again, trying to be smart operators and smart capital allocators. I think you got to look out at the opportunities that the markets present you at the time. Sprott's a perfect example. We were able to get 10 million US for our phase 1 construction. Our election between 9 and 18 million for phase 2, with a fantastic partner like Sprott in a streaming agreement. If you look at that like debt, it's very flexible for us. It's more or less, kind of a 9 or 10% cost of capital to us if you look at it as if it were a debt facility. So again, when we look at trying to raise the capital, we obviously want to be very cognizant of dilution. I'm the largest single individual shareholder. I own about 7.7% of the company. I'm obviously very focused on being fiscally strong and positive about how we're doing this, and have a fiduciary responsibility to do it so that shareholders get the best shake that they can out there. Tax is such a huge issue that we look at everything as well from a tax standpoint. So I'm not against any sort of financing or in favor of any sort of financing. What I try to be is very pro-shareholder with the lowest cost of capital and the most flexible terms that we can get. So I guess, moral of the story, trying to give you a quick answer to your question, is we'll look at whatever financing is available to us out there, weigh the pros and cons, and try to come up with the lowest cost of capital with the highest return on investment.
And you talk about these, as I mentioned in the overview, and you just brushed upon it as well, these value adds for the project. Maybe you can expand a little bit of what exactly those are. Like I had to spend some time looking into what exactly do they mean with that when they put it in the presentation more specifically, and more importantly, really, what do you see the ROI being and you being involved in that part of the business? That doesn't happen with most commodity producers, right? I mean, iron ore producers are not gonna get into smelting all the time, or like they're not gonna get. So talk to me about that. Like, where do you see the ROI there?
Again, I think when you look out across the space, nearly 100% of all the value add production is in China today. There's a little bit out of Korea. There's a little bit out of Japan. And I think we've studied this for a decade. We've tested Santa Cruz material.
What is, Richard? Just before you continue, what do you mean value add? Like, do you
Okay.
mean what does that look like? If I want to buy a value add from you, what am I buying?
Great question. So let's take a step back and just kind of look at the products the products that are out there. So when you first talk about graphite concentrate, you're taking, our ore on average is about 3-4% in the ground. When you run it through the process plant, you'll go from 3, maybe 4% up to 92 to 97% graphitic carbon within that. So it's a dry powder, let's say. Then the next step in terms of moving downstream is you take, let's say, a 95 and you turn that into a 99.95% graphitic carbon, meaning you have taken your concentrate, you've either used a thermal purification process or a chemical purification process, and you've almost eliminated all impurities. So you go from, say, 95% graphitic carbon to 395. That's kind of the starting point for a lot of value add products as it relates to the battery space. So then you would say, okay, I'm going to take purified graphite, that's where the P comes from in some of the names, to a micronized graphite. So you take, let's say, on average, a D50, meaning that half of it is bigger than and half of it is smaller than. That maybe is, let's say, 140 mesh. We're going to turn that into the size of a hair. So it's almost like a viscous fluid. So you turn that into, say, a 15 micron D50. So you purify it and you micronize that. So that, for example, is a product that goes into a lot of alkaline batteries. So every year, there's 12 billion alkaline batteries that are produced. That's AA, AAA, Cs, Ds, 9 volts, the stuff that you use in your flashlights and other things. So it's a big, steady market. And the anode material in a lot of these batteries is indeed natural flake graphite. We used to start and stop our cars, I don't know, 6 or 7 times a day, maybe. Now today, every time you stop at a stoplight, you turn your car on and off. So that your battery actually cycles. It shuts the car down. You have a battery on board that restarts it as soon as the light turns green and you step on the accelerator. So what the lead acid battery manufacturers have found, if they put a little bit of purified micronized graphite into their electrodes, it performs better, it lasts longer, they get less warranty claims, etc. There's what's called expanded or expandable graphite. So you have your purified graphite. In this case, it's mostly flake graphite, so it's a little bit bigger. You haven't micronized it. You basically you soak that in a solvent, an acid basically, and that can be used for a variety of applications, including fire retardants. If you take, the difference between expandable and expanded graphite is one is heated and one is not. So you intercalate purified flake graphite, and you give it potential energy. And when you expose that to heat, it expands like a worm. And so there's a lot of applications for foils, gaskets, brushes, again, fire retardants. et cetera. For example, in a lot of steel superstructures, they're putting expandable graphite in with shotcrete, covering the steel superstructure so that if it gets to a certain temperature, the graphite expands and becomes a protector for the steel superstructure underneath it. So it resists heat. So a 9/11 maybe doesn't happen because the steel structure doesn't collapse underneath that intense heat. So there's dozens of different applications that don't even involve a lithium-ion battery for an EV. So there's a bunch of steps that I call midstream, which is purified micronized, expandable, expanded graphites, to where you eventually get to what the stuff that goes into the anode of an EV. So that is called spheronized purified graphite that then gets coated. And as we start moving midstream, say purified micronized, that's a step towards what a Tesla, a Ford, a GM, or similar would require. And the economics there are very strong. So again, our approach to having a phased approach is we're going to move our Santa Cruz first. We'll turn that into purified micronized. And just for, ballpark numbers, let's say that cost us, $1,400 to make. We can sell that for around $3,000, depending on the type of material it is. And not a lot of CapEx associated with that. And we'll just keep moving midstream, further downstream until we get to the CSPG, which is coated spheronized purified graphite, which is basically the anode that goes into the EV space. And that takes about 3 years to get to. So, the last thing a Ford, a GM, Volkswagen want is a car on the side of the road on fire because the battery chemistry or the material science or something didn't work out right. And so you start off in a gated approval process. You start off with a couple 100 grams and you step up to some kilos, maybe a ton, 5 tons, eventually get to some containers. But it takes you about 3 years from start to finish for a Panasonic, an LG, a Samsung, an SK, or any of the main tier 1 battery producers to say, yeah, that stuff is good. We've tested it throughout our supply chain. It plays well with the other children, so we're good to go, and we want to sign an offtake. So most of those contracts, Antonio, are, let's say, 3 to 5 year binding offtakes where I'm obligated to supply, they're obligated to purchase. You get, periodic adjustments in the price with those contracts. And this could be everything from, lead acid battery to Energizer, Duracell, Rayovac, any of the alkaline battery manufacturers, all the way through to, an SK or Panasonic, for example, that want to put your anode material into their batteries. And you have to basically show them that it performs well, it's safe, and it's been tested in a variety of climates. Because the EV, the lithium-ion battery, performs differently. For example, if you're in the middle of the Arctic versus I'm in Miami. So even things like the temperature affects the performance of that battery, how long it lasts, the distance it can go, time to recharge, et cetera. So when we say value add products, it's everything from purified micronized all the way through coated SPG, which could go into an EV vehicle. There's defense applications, a lot of the man-made electronics equipment, armor, things like that. A typical soldier these days has 10, 12 different lithium-ion batteries in some way, shape, or form in their uniform, walking around any given day. So again, military applications, technology applications, to stationary storage applications. So there's a lot of opportunities out there to be able to place this material. And again, I think first movers will have a real significant advantage to be able to get that material in there, sign some of these contracts, and you'll basically be ahead of, our goal is to have South Star be one of the first movers so that we've guaranteed a decade of success for us.
So if I ask you what your 10-year plan is, what you're telling me here is basically, do you want to no longer be a graphite company? Like you want to be a vertically more integrated company. So you don't want to remain the graphite miner. Like you want to use all of your products in a different way. Or would it be? I mean, would that be all of your graphite that is going to be used for those value add products, or are you still going to remain, selling or concentrate in your case?
No, we'll be always, and that's one of the beauties of kind of how we're setting this up. We'll be selling concentrate to our current suppliers. We've already signed contracts for sales, and our commitment to them is exactly that, is regardless of what develops over time, we will continue to sell into the industrial application space, be it brake pads, be it lubricants, be it high strength steels, because it makes strong economic sense. And we're going into this with the mentality that we want to be partners to our potential clients. We're actually in the process of trying to develop a variety of different products for specific clients, because there's a lot of quality control issues. There's a lot of well, we can't do that. Our approach is, because of the size of the company, because of where we're at in terms of our development cycle, the capital requirements around that, our goals are really to sit down with potential clients and say, why don't we develop something together and be able to have a better product for the market? So again, we look at basically partnerships and being able to develop those long-term relationships that'll be here, a decade, 2 decades from now. So we plan on selling across the supply chain. We also plan on being vertically integrated. We're going to be a carbon company. It's not like we're going to wander away from graphite, but at the end of the day, we want to be able to say, we mine it, we produce high quality concentrates, we sell that into industrial markets, we're vertically integrated, we produce value add components all the way through the supply chain. We're able to meet requirements for Ford, GM, Tesla, or whoever, as well as the military suppliers, as well as the guys that are making your brake pads that are probably in your car today. So if it makes economic sense for us, and it does, I mean, we're talking 35, 45% EBITDA sorts of margins. We're happy to sell into those markets all day long.
When I listen to you speak about these things, they make sense to me, because it's for a big part a battery argument. And I understand that a lithium-ion battery has more graphite in it than lithium. Same is the case for nickel, by the way. It has more nickel than lithium, really. But are you?
Yeah.
And so I understand the case for batteries specifically, but are you confident on there being enough demand for natural graphite as opposed to synthetic graphite, given the alleged improvement in efficiencies in synthetic graphite?
Yeah, again, I see them as very complementary sorts of products. So let's take a step back and talk about synthetic graphite versus natural flake graphite. So again, we dig a hole in the ground, we take the ore, we upgrade it to 95, 96% natural flake graphite. That's a product that we sell. Synthetic graphite is basically a pet coke or needle coke, meaning it's a petroleum product. You basically cook that at 3,000 degrees C for a period of time. You graphitize that coke product into what's called synthetic graphite. You mill that to a specific spec. So the holy grail that all car manufacturers are trying to get to is, I would like to charge that in 5 minutes. I'd like to be able to drive 1,000 kilometers on a charge and have that battery that is safe and lasts for 10 years. That's like where everybody would like to be. And we're actually really close on that. So when we talk battery chemistry, it could be an NMC, it could be an LFP battery, whatever. They mostly talk about the cathode chemistry, being how it's actually named, because it's so boring that the entire anode is basically graphite. And so when we look at the space, synthetic graphite on average has a much higher cost point, 1.5, maybe 2 times the cost of a natural flake product. It has a much higher sort of carbon footprint associated with it. So again, I see them as being ultimately complementary. And then the testament to that is like one of the main last producers of synthetic graphite batteries for cars is converting over to a blended anode, meaning it's about 50% synthetic graphite, 47% natural flake graphite with a little bit of silicon doping attached to that. And again, I think that to me seems to be, the leader in the field is, in my humble opinion, again, is probably BYD and their blade technology and the safety and the performance criteria around those batteries. I mean, just phenomenal from a safety standpoint, really good performance characteristics. They're just a really solid battery technology. And I think a lot of companies will probably follow that suit, but I see a lot of demand out there. Again, currently half the demand for natural flake graphite is industrial applications. That's growing more or less at GDP. The value add component is growing at about 20-25% compounded annually across a variety of industries. So again, fire retardants to foils, gaskets, graphite is in so many different products that we don't even recognize. That again, it's growing really, really strong. I'm just as excited about the lead acid battery business as I am about the lithium ion battery business. So I don't see synthetic as a threat. I see it as a partner. And in fact, we're talking with a couple synthetic graphite producers to do a blended anode that we can test and compare that to existing market components and show that to battery manufacturers. So again, I don't see it so much as a all or nothing choice. I think it's going to be this blended anode approach for the next 10 years, at least my professional time frame and South Star investment horizon. So again, I think I don't see any threats out there. I don't see any threats from alternative battery designs. The last thing that a Ford or GM or any car manufacturers want is a car on the side of the road on fire or a recall. When you buy an electric car today, you buy a battery and you get the car for free. Basically, that's the economics around it. So imagine if you're Volkswagen and for whatever reason you had a 2 million car recall. You basically throw 2 million cars in the trash and you have to replace 2 million batteries. So every car manufacturer and tier 1 battery manufacturer that we've spoken to, they all say the same thing. I want basically the same stuff today we're buying from China, just not from China. I want alternatives to be able to go buy that same material elsewhere. And then later on, we'll worry about different battery chemistry and battery designs. Right now, the urgency is really around supply chain diversification and having a much more robust supply chain around a lot of these critical sectors and industries.
The market has fortunately proven to me that I am not smarter than it so far, and I look at it for guidance at times, and I look at your stock price, and it doesn't seem like the market thinks the way you do. Like, for example, your share price, although to be fair, it's not only you, other graphite companies have the same charts, worse at times, but your share price has gone nowhere in the last 2 years, kind of stayed range bound, sort of 45 to 60 cents range. What do you think the catalyst for South Star will be that could break that chain? And is there anything that you could do? I mean, is it construction, cash flowing, contract thing that we talked about? Is it the graphite market itself doing something on its own? I mean, what changes this?
Yeah, I think if you look across the space, again, we were up basically 37% last year, 2023, of the 40 some odd publicly listed companies that we track in our database, and we track them very closely. So once a quarter, we go in, we look through their MD&As, we look through their technical studies, et cetera. We track them very closely. Of all those 40 plus companies, we were the best performing graphite company in the space, up 37% last year. Again, I think last time I looked, we were 63 cents today. Graphite overall has not gotten the same sort of attention that lithium has. And really the driver behind that has been around the price of lithium when it went from, $6,000, $7,000, $8,000 a ton to $90,000 a ton. If you had nothing except lithium in your name, you could go raise, $50 million and say you're a lithium company. It was that hot. And I think what we see really is, the supply demand metrics kind of go out of whack into 25, first part of 26. A lot of these gigafactories will come online. There won't be any supply out there. If you look at this latest round of tariffs that came out of the Biden administration, of all the critical metals, the only one that did not have a tariff placed on it in 2024 was graphite. Why is that? There's no substitute for graphite in the market today. They are obligated to buy basically from China. Is 2 years going to make a difference? Absolutely not. They're going to, the OEMs will kick the can down the road again. But again, what we see is a tsunami coming. We will start production this year at Santa Cruz. We'll be scaling towards production in Alabama. We should have results out for the PA shortly, which will be exciting results for our shareholders. In terms of catalyst, again, I think Warren Buffett has a lot of really sage wisdom, but in the short term, again, it's a voting machine versus a weighing machine, and I think that's very true. I think we're working hard to raise the profile of the company. When you look at comps, our two best competitors, I think, are worth 2, 3, 4, 10 times what we're worth sometimes, depending on what company you're looking at. When we start producing graphite, when we start selling graphite, when we're sold out of our 2025 production, and we're actually cash flow positive, putting money in the bank, I think that's going to be a really strong catalyst for moving the share price up. When we publish the PEA, for example, which should have, again, very strong metrics with what I believe is the only economic graphite project in the United States, again, that will be a very strong catalyst for our share price. But ultimately, what companies need to focus on is earnings per share and delivering those earnings per share to the shareholders and making sure that their clients are being fairly treated and getting good returns on their investment. And so I think in the junior space, everybody's used to, I just hit 50 meters at whatever 13 grams per ton. Exploration stories can go up and go down in the matter of months. What we're trying to build here is a multi-$100 million revenue company that has 35% EBITDA margins. It's going to take a little bit of time, but again, I think what we've got coming in the next 2-3 years is really exciting. Ultimately, what we want to have stood up in the next 5 to 7 years is 2 mines, each producing around 100,000 tons of concentrate, and a value add plant that's producing anywhere between 50, 60, 70,000 tons of value add. That's a $400 to $500 million gross revenue company with sorts of 35-40% margins around that. That's a really exciting story. When 4 years ago we were a 3 million Canadian market cap company, today we're a $30-35 million market cap company. My job is to make sure that we have the capital to move things forward. We allocate that capital intelligently, and we scale these operations as the markets require additional material. So again, I think an experienced management team, tier 1 jurisdiction assets that can be brought online quickly, that are in very low capital intensity requirements and first quartile of OPEX, it's a great spot to be. So again, if I were betting on the graphite space, I think what we're just trying to prove is we say what we're meaning to do, and we do what we said. So again, it's hard work. We want our clients to be partners for long-term I think over the next 2-3 years, we'll get better recognition, more value for our shareholders, and really be the first mover that's bringing production into the space. And in the Americas, there just hasn't been a lot of success stories. And again, I think that's where South Star will be different, is we'll be one of the few success stories of the 40 some odd companies that we track, be that in Europe, be that in Africa, be that in Australia or Latin America, Canada, US. I see 4 or 5 projects that are really economic. The rest is just fiction. It's just, a piece of paper that says something, but it'll never be built. It's not economic. It can't be licensed. It can't be permitted. There's a variety of reasons why something may or may not be. But again, our goal is to be producers and scale the production over time and then move downstream. And I don't see a lot of companies actually delivering anything other than, a study, or we got some more drilling results, or, a press releases out. We're actually building a mine, putting a plant into production, and starting to sell products.
But it's hard. I mean, you look at Sierra, for example, or Sierra. They have high grade CG, right? They struggle to make money even at these prices. So it's not. I suppose it's just not as straightforward, maybe, as it seems. Why do you think they struggle, but you think, like, oh, we are not going to be one of the companies that struggle?
Yeah, again, I think let's use Santa Cruz as an example to kind of start there. So I'm a couple kilometers off a multi-lane paved federal highway. It cost me a whopping 1.4. Didn't cost South Star. It cost 1.4 million reais. So let's say $250,000 to get hooked up to grid power, which is sourced from renewable energy, cheap power, very low infrastructure cost. I didn't have to build a road in. I didn't have to, invest $100 million into power lines. Our capital cost associated with infrastructure was very, very low. In one day, I can be at 2 of the main container ports within Brazil, or I can be at any of the major industrial centers within Brazil that require graphite. I have folks that have been producing graphite, making graphite for 30 years. They all live in the community by us. I have guys that have been selling graphite for 20 years. Again, they've been doing this for a long time. We have a lot of inherent benefits. It's at surface mineralization. It's open pit. It's, no drilling and blasting. It's an oxide ore deposit, on and on and on. So when you compare Santa Cruz, let's just say for our projections are right now, our phase 1 cost will be about $700 cost for COGS and Brazil G&A. We'll sell that for around $1,200 to $1,250 a ton, more or less. Those are ballpark numbers. When you look at a lot of these projects in Africa, they're in the middle of nowhere. They don't have any people that have any graphite experience really whatsoever. In fact, there were a ton of Brazilians at Mozambique that were helping build Sierra's Balama plant. So again, everybody with technical expertise, for the most part, is fly in, fly out. No infrastructure, so tough roads. Everything's got to be trucked in. It costs about 150 to 200 US a ton to ship from the mine just to the port. So, that's just an inherent characteristic. It's all on diesel gensets, or, now they're installing solar panels and other things. But initially, they were all on diesel gensets, and they're still operating on diesel gensets. Again, they have a blended sort of power source. All their equipment has to be brought in. Our phase 1 construction, 100% of all our equipment was produced and purchased in Brazil. I imported nothing. All our wear parts, all our inventory, Brazilian made. I don't have to import anything. I can sell our production into Brazil. I can export it. Mozambique doesn't have any internal graphite demand. There's nothing there. So again, I think when you start looking at a lot of these questions around how much has to be invested in infrastructure, how much has to be invested in logistics and transportation, energy cost, people cost. Again, by the time we scale this project up, we'll be, kind of high 500 source of OpEx for Santa Cruz without having to scale this to a monster production. And that's really where I think, I think if you look at Mozambique as a perfect example, it was marginally, when you actually look back into its history, it was a marginally economic project that the only way that made sense from a financing standpoint was to make it big. So like all good Aussies, they turned it into an iron ore mine. It's like, make it big. And the only place that they can sell that material is really into China. So they sell cheap fines into China, and they lose about $150 a ton on being able to deliver that material to China because that's the only place that can buy it. Again, I think Africa as a whole has a lot of those same tough operating characteristics, whereas Santa Cruz doesn't. I have to sell 12,000 tons in 2025. When I'm really going crazy, I have to sell 50,000 tons. The product that we can sell, we have 63%, 60% of our production is 80 mesh or above. Again, we've got a lot more applications that we can sell into. Balama, for example, is principally, a fines production. There's only one spot that you can basically sell that, and that's into China. If you look at Tanzania, Tanzania, the government of Tanzania is an 18% partner, free carry for life on any of those projects. So imagine taking 18% of your profit and handing it to, again, I'm not saying it's wrong or inherently any problems associated with that. I'm just saying when you're comparing apples to apples across jurisdictions and you're looking at that cost curve, the three most profitable mines in the world today that are actually in production, not paper, are all in Brazil. So again, I think ex-China, there's not a lot of jurisdictions that will be able to be economic and compete with Asian production throughout the ups and downs of any inevitable cycle. And I just think that's inherent to a lot of these deposits, the requirement that goes into them in terms of infrastructure, capital intensity, people, flying people in and out, et cetera, where a project like Santa Cruz has just so many inherent natural benefits that make it so price competitive and cost competitive compared to everything else out there that it's an enviable position to be in. And again, I think the geopolitics and surety of supply and provenance of supply is becoming increasingly important. So again, that's where I think opportunities around some of these other projects comes in play. And that's why I'm also so excited about Bama Star. But when we look at the projects, we only have about 5 investment criteria. One of the first ones is it better be in the first quartile or near the first quartile of cost. If it can't be in that sort of range, I don't even look at it. So again, I think when you look out across the space and you need to deliver an apple, and Bob can deliver an apple at a third of your price, that's a tough spot to be. So again, that's where when we look at it, it has to be linear in terms of being able to permit and license it. We want it to be able to go into production in a fairly short amount of time. It's got to be low capital intensity compared to everything else out there, meaning I don't have to spend $250 million on infrastructure, and it better be close to first quartile of cost. And so when we look at projects, that's kind of how we evaluate it. And again, I'm not trying to beat up on any given country or company or anything like that. I'm just saying we track 40 some odd companies. I feel very confident saying I think we've got one of the best portfolio of projects out there that could be competitive with Asian production. And I put my money where my mouth is. So I think it's going to be a fun time for us over the next couple of years.
Let's maybe do a review of what exactly you're doing over the next couple of quarters. Again, you have you're going into commercial production during Q3. You're expecting a PEA for the American assets there in Q3. What else? What happens in Q4 and Q1?
So again, we'll be signing a bunch of agreements, commercial agreements here over the next coming months. We'll be kicking off another drilling camp, on the back of the PEA in Alabama. Again, we'll be kicking off another drilling campaign, so we'll have a lot of drilling focused on taking resource and converting that into reserves. So we'll have drilling results. We'll have the results of the chemical analyses, the physical characterizations, the electrochemical results, slurry design. We are producing cylindricals as well as pouch cells, similar to what would go into an EV. So we can actually say, here's how Santa Cruz compares to currently available commercial products. Here's how Bama Star compares to commercially available products. Here's how Santa Cruz compares to a blended anode. We would take some of our CSBG, blend that with synthetic and silicon, compare that. So we'll have, geology results, drilling results, resource reserve expansion, battery electrochemical results from both projects. We'll have the feasibility coming out for Bama Star. The goal is to basically have our FS out at the end of 25, early part of 26. We should have our feasibility study from Santa Cruz, taking our PFS up to a feasibility study. Again, that will be out towards the end of 25. So really, when you look out across the space, we'll have start of commercial production, steady state, commercial production there, sales, revenue, profit, as well as all the good stuff coming out of the studies. I think we'll have a fantastic news flow for the next 18 months. We've got, a couple really strong announcements that'll come out every couple months, and a couple every month. And again, I think we're in a strong position to be able to be one of the first movers in the space, and really the first new graphite production in America. Is a fantastic story at a critical time.
Richard, this has been a good overview. I think we can maybe revisit this in a couple of months and see how everything's going for you. Well, thank you so much for going in depth on the graphite market as a whole. Thank you for covering these things. It's been a pleasure. What am I forgetting to ask you here at the end, though? What did you come here hoping to talk about that I'm failing to bring up?
No, I think we covered it all. I'm graphite. I don't envy retail investors trying to understand physics, material science, chemistry. It's harder to understand than gold, copper, silver, etc. Even our contacts, analysts that are keen on the energy transition space, or DoD folks or DOE folks, it's really hard to understand what projects are real and what projects are probably not, which projects are economic and why maybe they're economic. Not all graphite's the same. I mean, there's differences in how it performs beyond just saying, oh, well, I've got graphite concentrate. Well, the fact of the matter is not all graphite concentrate is the same. It doesn't all work for a variety of different applications. So I think when you look out across it, it takes a lot of education. And I wanted to thank you for the opportunity to just kind of walk through some of those different differentiators, because it is such a hard topic. I can't sell this tomorrow on the LME as much as I would like to, but unfortunately, it's just, it's B2B. It's whatever you can sit down with your partner across the table and negotiate. And so again, I think the more opportunities that we have to get the story out there to help educate around graphite and critical metals in general, it's really important work that you're doing. So I appreciate you inviting me on, and happy to come back whenever you want to talk about it again.
Good. Well, thank you, Richard. This being very in depth. It was much more focused on the graphite market than company specifics, although we did go through some of the company specifics, and I appreciate that as well. Seems like you have a plan. Nothing's really easy out there, but I do wish you luck, and I do appreciate you investing your time in me. So thank you so much for doing this. I'll let you drop off now, though, as I am going to be going back to Canada, New Brunswick in particular, where I'll be looking for really all sorts of critical metals, including copper, zinc, lead, allegedly silver, and even hearing about bedrock, maybe a little bit of gold again. So now I'm going to be hearing about them from Patrick Cruikshank, the CEO of 9 Mile Metals. 9 Mile is listed as 9, so that'd be NINE on the TSX Ventures Exchange in Canada, where an average of about 130,000 shares trade each day, with a 52-week high of 18 cents and a 52-week low of 5 cents. With a market cap of about $4.5 million and about 79 million shares outstanding today, this is a 6-cent stock. There are 17.7 million warrants and about 5.5 million options, leaving the number of fully diluted shares at about, and I'm rounding up, 100 million, with insiders holding about a third of the company. The last financial statement, which is dated March 31st, shows me $775,000 in current assets, most of which $655,000 to be specific in cash, with some prepaid expenses and some account receivables on top of that, although this might look a little different because after the publication of this financial statement, there's been a financing that's closed. On the liability side of the balance sheet, there is a convertible loan, which is kind of unique for junior, so I'll touch upon that later on, hopefully. But that loan now sits at $170,000 left on it. It's a 15% interest loan due by the end of the year. It is a convertible loan, though, so that's convertible at 10 cents per unit. Both the capital and the interest are. And it's convertible into a share and a warrant. And the warrant is also convertible. It's exercisable at 10 cents. There are other account payables on top of that for a total amount of $340,000 in current liabilities with no long-term debt, luckily. That same financial statement from the end of March also tells me that on average, over the last reported 6 months, 9 Mile recorded about $64,000 a month in administrative expenses. That's excluding share-based compensation and non-cash expenses, with the majority of that money going into consulting fees, management fees, professional fees, and a little bit of marketing too. As to the exploration expenditures for that same period, they were published at around $680,000 for the entire period, which equals about $115,000 per month, again, on average, over that last reported 6 months, with drilling itself making up the majority of that cost, specifically focused on the Wedge project, which I'll tell you more about in a second, as well as some of it was focused on California Lake, which I will also hopefully talk about later on. From a ratio perspective, though, this means that 9 Mile's total cost over that period was split roughly in a 65-35 fashion, with exploration being the 65 and administration being the 35%. As it always is, though, this is nothing more but a snapshot in time, so it's not necessarily fully representative of how this company is going to run in the future. So please head over to the company's website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. So all very exciting stuff here, isn't it? Numbers, but that's not the only reason why we're here today. We're here today because 9 Mile has 5 assets, mostly focused on VMS deposits, with, again, the majority of the money going into the Wedge project. But 4, depending on how you want to look at it, but there's 4 of those projects are contiguous to each other. So it starts with the Wedge project, which is not a huge asset. It covers 36 square kilometers. Then immediately to the northeast are the Canoe Landing and Canoe Landing West. Again, if you want to talk about them as different projects, together they're covering about 15 square kilometers, so half the size of Wedge. And then immediately to the north from there is California Lake, where another significant part of the money has been going into. And this is about the size of Wedge, so that's 35 square kilometers. So we're at 85 by now, 85 square kilometers. And then to the east, so there's there's space in between, and then there's to the east from that project group is the 9 Mile Brook project, which is another 50 square kilometers. This is the biggest project from a land size position, so a total of plus minus 135 square kilometers of land in New Brunswick, all of which, again, prospective and focused on VMS deposits, according to the company, which is also why they've kept drilling the projects, with most recently hole 5 and hole 6 coming back from the lab and showing highlights of up to 1% copper. That's copper equivalent because it is, again, copper, zinc, lead, silver. Not a lot of lead, but actually zinc and gold in there as well, silver and gold in there as well. So that hole was 272 meters long, with multiple zones of varying grades. Again, on the high end, a little over 1% copper equivalent. That was over 8 meters, and then on the low end, a little over a quarter of a percent of copper equivalent over 12 meters. That is. And then the other hole, so the other one of the most recently released holes, that's hole 6, that came back with only one mineralized zone for about 10 meters of, but it was high grade. So it was almost 2% copper equivalent, with notably most of that mineralization being actual copper. So again, it's equivalent, but most of it is still actually copper. So long story short, I'm not going to go over every project here, but there is mineralization across these projects. The thesis seems to be working out, but Patrick, the market doesn't seem to care about any of that. And the stock price is now close to not only 52 weeks lows, but close to all-time lows. What's happening? How come?
Yeah, I mean, the Canadian market's very challenging in the last 12 to 24 months. We did hit a high. Actually, we were one of the highest traded volume companies since we acquired the project in 2021, up to like the sixth heavily traded. We traded over 60 million shares, pretty much sold our share cap over and over. But what's happened in the last 2 years is we really started this project with 9 Mile Brook. We found a lens, and lens is a broken off part of a VMS deposit, and they come in multiple lenses. So a deposit's a solid brick, and then it gets broken with all the folding and thrust faulting in the camp over 400 million years, and it breaks it into pieces. So we have the highest grade lens ever recorded in the camp in our 9 Mile Brook. We drilled 6 holes on that, and we came up to 12% copper over 20 meters, 40% lead zinc, 3 grams per ton gold, and about 3 to 600 grams silver. So very, very high grade. And obviously all these deposits, the Bathurst mining camp is world famous. There's 45 deposits, 25 of them over 1 million tons. And it all comes on a certain fairway in the camp, rock formation, the California Lake, and then the Nipisiguits formation, and the contact between. And that's where we've concentrated all our acquisitions on our land packages. And we have an eastern package now, the 9 Mile Brook and surrounding area, which has grown. And then we have the western package, which is the Wedge, California Lake, and Canoe Landing east and west. So it's very prolific. We're very excited. We're very high-tech centric, and we've taken we put a lot of our money and our analysis in the ground, obviously, as you can see with our financials. And we're right now, we have EarthEX, our geological and geophysical partner. They have proprietary drone technology that shoots down to about 800 meters with AI algorithms and reprocessing, and that has been phenomenal. So we've used that in the last 2 years. We have drilled California Lake East and hit 8 out of 11 holes up to 20 meters of BMS. We now have acquired what we believe is a source property south of that, about 2 kilometers. And EarthEX is actually on the ground right now, doing a borehole on hole 10 on California Lake that we did in the fall last year. Very, very deep, testing new technology that claims to have a 200 million ton anomaly subsurface that we're testing right now. And then we did acquire the Wedge last year, and the Wedge is interesting. So it's an orphan mine. The head frame collapsed in the late 60s, and they had only mined about half of the asset. But you got to remember back then, they didn't even have ICP assays, right? They didn't assay for gold. They didn't assay for copper. It was just lead zinc really in the camp. So one of the philosophies is going back and revisiting these deposits and see with new technology if they're deeper, bigger, and see what the grades are with the full element list of copper, lead, zinc, silver, and gold. And they're all unique. And that's why we know the 9 Mile Brook lens, the source is still out there, and it's close because they don't travel far. There's no other lens or deposit in the camp with those grades, and it's ridiculously high. And that's why with even the government geologists, they believe we're very, very close. That deposit's very, very close to a vent where it came up and didn't travel far and get diluted, right? So we're still searching for that. It takes a lot of money and a lot of time to do the geophysics on that big of an area, right? For a nano cap or a small cap. Back to the Wedge though, the philosophy on the Wedge, and there's trends in our Western portfolio. So it's much easier to do exploration when you have mineralized trends and geological trends versus the Eastern portfolio. So the Wedge, They claimed there was 2.5 million tons. It's unique. It's really a copper deposit with base metals, as opposed to high lead, zinc, and more averaged across the 5 elements. It's really a concentrated copper. And out of the 8 holes we just drilled last fall and just finished all our assay reporting, we believe we've just added an eastern extension with our geophysics that we were testing. That's unmined. It's new ore, and we're trying to prove the footprint's bigger, and we did that. We did prove that at those 8 holes on the east side of the mine, the historic mine is all new, solid core, and adds north of a couple million tons. So we're having that right now analyzed and quantified, and we'll come back to the market with that. We now are going to test the western side of the mine, and we're taking one of our drill holes, and we're going to do borehole on hole number 1 at the wedge, and try to get an EM signature to see how deep this goes. We believe it's deeper. We believe the footprint's bigger, and that's what we're going to do at the wedge. But like everything, we're super busy, very active. But of course, with no income, you got to continue to do market raises, but we are very dedicated to putting the money in the ground for moving shareholder value north.
Well, Patrick, that's one of the reasons. Well, that's the main reason, really, why I opened with that question, and I want to touch upon pretty much everything that you just told me right there. So we're going to get to all these points, but there's another important point, part in your journey, really, as a junior, and that's capital, which for sub $5 million companies is not always self-explanatory. Now you're operating in Canada, so we have other means available to you, like flow through and whatnot. But that's also not always the right option, really. But so talk to me about that. What's the overall corporate strategy when it comes down to raising capital? Do you just keep going back to the market, and doesn't it get too dilutive at this valuation? How do you figure that out?
Yeah, I mean, well, obviously, there's 2 ways to look at that right now. Do we believe we're valued correctly at the moment? Absolutely not. Absolutely not. We believe we're so subvalued right now with the market price. Obviously, I mean, our market high before we even added the wedge and other assets and advanced the projects was, I think we were in the 40s. We hit a market high in 21 or 22, up in the 40s. But it seems like the capital markets, number one, they're only rewarding is very short window of commitment, right? So they're only rewarding drill holes and drill hole results. They're not. It's a very short-sighted market right now, and going into the summer, obviously, with the smaller volume, they're going to keep their windows and their time horizons very, very short. So we're looking at it as an opportunity right now to buy out. We've improved our portfolio. We drilled and hit VMS on several of our projects, and that's just phase 1. Now we're doing all the advanced geophysics to come back and drill all our projects on phase 2. So nothing has changed from our side except for the share price. You know, I totally believe we're very much undervalued. None of the insiders have sold any stock, period, since 2021, since I've been involved. And yeah, we're excited with the program we're doing, and we'll eventually get rewarded. I mean, you can get in a whole philosophical conversation about the Canadian markets and short selling and naked selling and all those kind of things. It's gotten to a high frenzy right now, but yeah, I mean, you can only put your head down, keep working, and keep moving forward with the investor and shareholders' obligations and rewards in sight.
But I suppose that's really more or less everyone's plan or goal or hope, at least, to raise capital at higher prices, not have to do it at these prices. But how do you get to the higher prices is part of that, is an important part of that, really. And again, to go back to the opening question, if the market doesn't care about these results, what can you really do to get the market to care and help the stock price go back up? I mean, you're doing the droning stuff. Again, I want to talk about that. You're going to be doing BATM. I want to talk about that as well, but these things are not going to get anybody excited, it doesn't seem. So how do you get people excited?
Well, it's the precursor to that, right? So yes, some people have criticized the market that they don't like revisiting orphan mines. right? They're all rewarding you for new discoveries, right? New assets, new deposits. So whenever we, like California Lake number 10 hole, excuse me, market reacted very, very well, right? We're down hundreds and hundreds of meters, and it got so hard we were burning drill bits 3 hours to go 1 meter. So what we decided was to do a borehole EM while it's there before we revisit and continue down, because we didn't hit target depth by the winter break coming. And rather than very expensive to continue the hole, let's take a free look and do the borehole, which just started yesterday. So I think when we get the results from that, which will be just days away, you'll see that come back, because what our shareholders want to see is California Lake number 10 and see if there is a prospective deposit in that area within a couple hundred meters, because and then go back to 9 Mile Brook to that lens and see phase 2 on that. I mean, it's hard because running the company and doing what we believe is in the shareholders' best interest to advance all our projects and to advance all our assets to full shareholder value sometimes is not aligned with what the investor wants you to work on today. So we are going to continue with the wedge as a priority, because if we can just prove that's up to 7, 8, 9, 10 million tons and new ore, that's a deposit. That is an economic resource, and that has to be addressed, obviously. And it's very copper rich, right? So we're going to continue to have that as a priority, and then we're going to continue with new exploration on our advanced targets. So that's our road plan for this year.
And I suppose one other strategy that I'm thinking of now that you're mentioning that there hasn't been any insider selling is the opposite, insider buying. We have seen some of that in the past, last year, I believe, and the year before that from Henry in particular, but nothing else this year. Is that in the plans? Or are you guys maxed out? How do you look at insider buying?
No, I mean, honestly, we own a lot of stock. We own a lot as a management team, in the high 30% range. I think bringing new investors to our company and new eyes to our company, hence we're doing this interview today, telling our story, because Canada is a small market and there's a lot of junior marketing companies. So if we can expand our reach and exposure to Europe, Asia, and so on, and the US, I think you will see we are a good opportunity, especially at these attractive values and with quality of our portfolio and a proven camp. We're not looking for the needle in the haystack. This is a proven camp that we, as well as the government geologists and PhDs, believe only 30% of the deposits have been discovered. So there's a lot of upside, but they're difficult, right? They're vertical deposits. They're very small footprint at surface, between 500 to 1,000 meters, but they can go down up to 2 miles. So is it 300 meters below surface, 800 meters below surface? I mean, Canoe Landing Lake, we're on the east and the west, both sides of the deposit. There's a Canoe Landing Lake deposit there with 33 million tons of 0.5% copper and over a gram of gold. That's economic. And it goes on to our projects. It goes on to both our projects. So we believe we built quality, high quality. Now it's, unfortunately, it's not just like following a gold vein and a geological trend. VMS deposits, there's only 1% outcrop in the camp, 99% is hidden. So it's technology based. It's a lot of drilling, and yeah, I mean, we've proved that we're very much active, and we really put a lot of the money in the ground and drill. So that's why we're doing the precursor now to hole 10, and we're going to do borehole under the wedge deposit, get a picture of that, and then we've got all our targets that we on the western roadmap, the source for target 8, which is target 6, and the 2-kilometer trend. We're gonna prove out our portfolio.
We'll get to all that, Patrick, for sure. Those are interesting stuff that I also want to talk about. But so to more specifically to that question of insider buying, are we going to see insider buying, yes or no? And I mean, what I'm getting here from your answer is basically that's not the focus right now. We want to get new eyeballs on the story from maybe different angles that weren't watching the story before, and kind of clean up the ask, if you will, that way.
Well, I mean, insider buying, it's a lot of people do it for to get an effect, and the market's not rewarding, right? Like I'm the largest shareholder, period, in Nine Mile Metals, as well as Gary Lohman. So I mean, we could buy more stock. Is that our best use of directing the company? I mean, what are we? Just under 20 million shares. It's a lot of stock. So there's a lot of companies that do insider buying for marketing effect. That's not who we are. We just want to run this like a real company. The problem we've also been having is we've wanted to participate in funding, but with material information, we're precluded from participating. Right. So unless, you know what I mean? So there's a lot of regulatory issues as well. If we weren't raising funds and drilling, and you can't participate, while we're drilling, obviously, and stuff like that, we're active all year round. So there's not a big window for us to participate, to be honest. And for us to participate, the volumes we want, just not there right now. Right. So again, if we were to just do what a lot of companies do, which is have a very small exploration program and market for 10 months of the year, we could participate. But right now we're so active. We have a presence year round in Bathurst, and obviously EarthX is there now, and we're insiders. We can't participate while we have material information. That's the problem for us. We're so active that there's never a moment where we really don't have material inside information because we are that active in our program.
And I suppose part of that financing strategy so far seems to be convertible, that convertible debt note that I mentioned that you've issued. So debt is part of it. It's not cheap though. It's 15% interest and a full warrant on top of that. What was what's the thinking behind getting that?
Well, it's average. I mean, people are paying up to 20% interest for debt these days, and we're not. It's very, very small. I think it's just under $200,000. But that was to fund a program we're doing right now, which is active, which is our bulk sample at 9 Mile Brook. So up to a 3,000 ton bulk sample, that's what that was there for funding to launch that, which we did all the engineering reports. We've had all the site samples. It's all been approved, and we're permitted up till the end of this year to do a 3,000 ton bulk sample on the richest lens in the Bathurst mining camp.
Yeah.
So we've advanced that right now all the way to, we just had them on site again last week when I was there in New Brunswick with the site engineers and everybody. And now we've gotten all our quotes, all our costs, everything in there. What we're doing right now is reaching out to the smelters and to the mills to process the bulk sample, and then work backwards from when they can fit us into their operation to process it.
So that's not going to be convertible loans and stuff like that. That's not going to be part of your financing strategy going forward.
No, it was a one-off specifically for the proceeds for the bulk sample project.
Right. Okay. Who holds that debt?
That's retail investors.
Okay, so
it's small,
it's not it's not management.
No, again, we're precluded from participating in a lot of these items.
Yeah. Are there royalties on any of the projects up there?
There are. We acquired projects. There are royalties, and then when something very rarely becomes available with the New Brunswick government, we can stake it and compete to stake it. And when we do, there's no royalties on those. But yeah, there are royalties on all the optioned projects, which is 9 Mile Brook, Canoe Landing, the Wedge, California Lake. Most of them do, as is very common.
Okay. Does management hold any of those royalties?
Management?
Yeah.
Fiddlehead Mining, Slam Exploration, Prospector, our vendors that we got the projects from. Okay,
so I mean, like, you don't own a royalty personally in the project.
I came from Fiddlehead Mining, Gary
Okay.
Lohman and I. That's how Nine became a company. It used to be called Stevens Gold. They acquired 50% of 9 Mile Brook and 100% of Canoe Landing Lake from Fiddlehead. And so I am an optionor as well as CEO. So Fiddlehead Mining owns royalties on the properties that they were acquired by Stevens Gold, which became 9 Mile Brook.
Okay, and then you own part of Fiddle Gold, I suppose. What part?
Yeah, I'm a shareholder and founder of Fiddlehead.
Okay, Fiddlehead. What is that? A significant part? Like, do you own half of that, or like how much do you own?
I'm not sure on the. I am a large shareholder, obviously, as a founder, but we have, and all those investors in Fiddlehead, which was a private company, exploration company that finds these, and they are all of the investors are 9 Mile Metals investors now. Because we didn't do a cash deal. It was 100% stock transaction, which we wanted. We believe in those projects very highly.
Well, that is what I'm trying to figure out here, Patrick, is that what's the driving factor for you? Like how aligned, if I were to buy shares today, how aligned would you and I be? As in, you have the value of the royalty to think of, but then you also have the value of your shares to think of. So which of the two is a deciding factor?
Well, they're completely aligned. We're all on the same side of the table because I'm 100% reliant on stock performance, right? All of our investors are, and management, right? And then even with royalty, if we don't find a deposit, what's the royalty worth? Nothing, right? So again, we're all aligned on advancing this to a deposit discovery, right? If we wanted to, we haven't sold any stock whatsoever, even when it hit highs in the 40s. Haven't sold any stock at all. So we're very much dedicated to this project and dedicated to our portfolio, and we completely believe in it. And eventually, hopefully, that'll reflect in a better market. And hopefully, once we get through the capital markets and U.S. election, you'll see the markets tighten up and become stronger.
Well, it could matter in situations like, for example, getting a JV partner, how quickly you advance the project. That's why I'm asking that. Would you, by the way, consider a JV partner at this stage? That seems to be a popular option with some of the juniors out there.
Like option our own projects to somebody, or are you just talking about? I mean, I get phone calls and inquiries weekly for us to sell or option off our projects because they're high quality, right? We believe in them. We're going to continue to work them. I mean, it's a challenging, tough capital market right now, but we thoroughly believe in them. We're continuing to stack the wood and get our results, and everything's on track. But would we be open to a partner coming in? Yeah, if the valuation's good for the shareholder, absolutely. And there's a lot of consolidation. There's a lot of our peers in the camp doing quite well, and one of us is going to have a big discovery very shortly, and it'll help everybody. And if you look in the copper gold market and the EV market and all that kind of stuff, there hasn't been a big copper discovery in decades. And we are, like, whether you look at Chile or Australia or so on, those big discoveries, and look at the Brunswick 12, 335 million tons. Largest zinc, it was called a zinc mine, but it was, copper, lead, zinc, silver, gold. The Caribou in the camp, there's roughly up to $1 billion of gold sitting in the tailings pile.
But you're not actively,
because these are big monster elephant deposits, but they're hard to find because they are like needles. They are vertical needles, so you can miss it very easily. The Brunswick 12, they found it on the 12th hole. The Brunswick 6 with the 6th hole, but they had outcrop back then in the 50s. So the low-hanging fruit's all been found. Now it's the more difficult technological phase, I would say. But the technology is getting there. It really, really is. Like, on California Lake East, we hit 8 out of 11 holes just on reprocessed data. That's amazing. Yeah. And prove the VMS system. We didn't own what we believe the source target was, and last year we went and bought it. So now it's very expensive, but we just launched a 1,400 line kilometer 3D drone magnetic program, which started yesterday by EarthEX. They're doing the 2 downhole borehole surveys, and they're doing surface EM grids based on those 2 programs, the drone and the downhole. So we will have drill targets, X's on the ground of our targets we've already identified, and we're very excited for it. We are very excited.
But so you're not actively out there looking for a JV partner where you say, let's not do equity dilution, let's do asset level dilution. That's not something you're actively pursuing?
No, we're not out there making phone calls. No.
Okay.
We are receiving phone calls, but not out there trying to look for a JV partner at this moment.
Okay.
I mean, we just raised, another $1 million of flow through, and I think we're sitting around $800,000 in flow through right now.
Okay.
So, again, hopefully our activities will get rewarded in the market, and when our price goes up, we can address future financing at a higher price, right?
How far does this money
I mean,
you?
like I said, I can keep repeating it. Do I think we're attractive? Yes. Do I believe we're fairly valued? No. We are completely undervalued for our portfolio.
Yeah. So how far does this money get you that you have right now?
Oh, I mean, our program we're doing now, and even our next drill program, we have we have enough funds to do that. So again, this is just the first phase. We have enough funds for our program for the rest of the year, and that includes drilling based on these geophysics that we're doing right now. So we don't need to run out there and do flow through funding tomorrow for these activities.
Right. Okay. What do you there's no more assays that you're waiting for? I mean, you just reported hole 5 and 6. Are you waiting on any more holes?
No, we just reported and put out a press release with a summary of the 8 holes showing a significant ore body on the eastern part of the wedge. We were trying to get into target 2 and the west side of the wedge, but with the trees and the snow and the amount of snow, Bathurst gets 10 feet plus of snow. We couldn't get the drill rig in there. So now we've got access with the summer program to get in there. What we're doing right now is just doing 3D technology to get the subsurface modeling of anomalies, so we can not waste dollars on drilling without precise targeting,
And that's something I am going to ask you about later on as well. I do want to try and better understand everything that you understand now after you've drilled these holes. And let's maybe kick it off from the perspective of let's maybe start even higher level than that. Given the polymetallic nature of the mineralization on here, what are the primary controls responsible for the distribution of the different metals within the system, given that you're dealing with zonation in some of these holes?
Yeah, and like I said before, I'm not a geologist, but each VMS deposit is unique. It could be, lead zinc rich, copper low, etc. The wedge itself is the opposite. It's copper rich, zinc lead low. There is a burst there. So I'm going to say this wrong, but as these pulses are coming, 400 million years ago from within these vents and subsurface volcanoes, underwater volcanoes, it's going to spit out. Like a perfect example is our trend on California Lake East. We believe we have the source identified, which has been press released. 2 kilometers to the north, we hit VMS, but it's good lead, zinc, and so on, but the copper's lower. It's diluted. Well, that's very simple, because copper, the farther away from the source, the more diluted of the copper, and that's at the northern tip of our trend. So we believe now we own the trend 100%. We are going to drill down on that. And that's part of this program right now, to fly the drone over everything at 35-meter spacing. So we have high def 3D subsurface modeling on our anomalies, which have already been reprocessed. So rather than just go drill like some people wanted to us on target 6, we're going to explore and exhaust the technology, because got to be prudent, and it will save us money on 1 hole versus 5 holes, because you can miss it by 5 meters.
Right.
It's very, very hard when these are vertical deposits. There's been so much activity over 400 million years of folding and thrust faults. And just for example, all the deposits on the west side of the camp, the deposits on the east side of the camp are inverted because of the folding. So you really have to do your technology and your prudence and filtering, and we believe we have the filter model with EarthEX. So we're very excited to implement, and then it's just a matter of execution after we do this next month of geophysics.
Do the different zones respond to different stratigraphic units or their host rock lithologies? Like, what's the different with those? What's the deal with those different zones?
Oh, I'm not sure what you mean by zones, but we focused on the California Spruce Lake Formation and then the Pisiquits. And that contact, if you look on the geological deposit map of the camp, almost all the deposits are spatially about 10 kilometers apart on that contact. And that's exactly where California Lake 6 to 8, and we hit VMS on target 8. Now we're going to focus on what we believe is the source 2 kilometers south. The wedge is on that node. And I think, like I said, I think we have the roadmap, and I think we have the right technical people there with their proprietary algorithms and modeling to exploit the VMS deposits that are still hidden,
Well, why I'm asking this is because I'm always careful with polymetallic deposits in respect to metallurgy. So maybe we can talk about that more directly, but how much do you know about the metallurgy from this recent work, but also maybe the historic work? And are you doing any met testing this year to confirm?
No, I mean, we'll assay them. And, like I said, back in the 60s and so on, they didn't even assay the gold and copper. It was just lead, zinc, silver, right? There wasn't even, I believe, ICP for gold back then. But before we get into that, we got to prove up there's an economic source before we go to metallurgy for any kind of production type thing. We have sent 9 Mile Brook. We did send the lens to core to RPC in Fredericton and had it analyzed for the bulk sample and everything, and came obviously with high grade. But what was interesting, we also had indium, big indium numbers in there, which is used for technology and computers and so on. So yeah, I mean, we have the highest grade concentrate that they created down there in RPC. And that's our challenge with the bulk sample, is it's so high grade. We're going to have to get it processed, and then whoever we contract for that, and we are shopping that right now, is they're going to have to blend it into their VMS mill and create the concentrate, because it's too high grade. And as you know, they can't deviate too much from their metallurgy and their formula of their mill. It's based on their deposit, but they'll have to, bleach it in there into their model, because 12 to 15% copper over 20 meters is ridiculous. And 1% over 300 meters. I mean, what would the market respond? Sometimes I wish we had hit that hole, 1% over 200 meters instead of 10% over 20. It's maybe they would have responded differently. But no, it's and again, once we revisit the exploration, which we are right now around 9 Mile Brook, with the next phase of geophysics, after they finish our western portfolio, they'll address the 9 Mile Brook area. I think the market will respond favorably, revisiting back to that unique lens deposit.
But then why did you go, or why are you going for BHEM borehole electromagnetics in that case? Don't you, like, it almost seems like you already know what's happening, what's there, and where you go and drill. So what's the reasoning behind spending money?
Well, the borehole we're doing at the wedge, because we think it's deeper, we only drilled, I think our deepest hole was 200 and something meters, right? It's a lens about 70 degrees, and we're drilling eastern, going down. We know the lens was broken. And again, back in the 50s and 60s, whoever was producing these mines and these productions, they didn't have to, they wasn't obligated with the government to share data. So there is no data. There is no core. So we drilled it, number one, because we believe the footprint's bigger based on EarthEX, and we proved that. The eastern extension was never mined, and we've hit some phenomenal results. Again, we will have that quantified into how much millions of tons that adds to the what they believe is left. They believe there's only 500,000 tons left. We don't believe that at all. We believe it's a deeper deposit because there's a fault and the lens broke, and that's only one lens. There's multiple, right? So that's why we're doing the borehole. Rather than drill a 600-meter hole and hope that you go right down its throat, we want a picture, subsurface picture, and we'll use one of our holes to do a borehole downhole EM to get a picture, a couple hundred meters in all directions around it. And we'll do that potentially in multiple holes and get a subsurface real true picture. And then the drone will also be aerial versions on the magnetics, giving us all the conductive responses to, and we're doing very, very close 35-meter spacing, not 200 meters, and have software extrapolation to give you an image. We're doing 35-meter native line spacing. So this is going to be very accurate, very, very accurate.
And so that's going to help you zone in better for next year's drilling, this year's drilling. What should I say?
For this year. So after we do the 1,400 line kilometers grid over California Lake, Canoe, and the Wedge, we'll have 3D subsurface modeling for all those packages, which includes California Lake 10, 6, 8, like 15, what we believe are 15 potential deposit targets. It is very important over the Wedge because it'll give us, the drone will give us a structural integrity and geology. So we'll know where those faults are. We'll know where that lens slipped and all that kind of stuff. What it will also give us with the borehole is just another degree. Plus we're having a 3D model based of, we did acquire paper records of the 200 and change Cominco drill holes of the Wedge, which is owned by Tech Resources now. We did get the paper logs, and we have digitized those, and they were sent for someone to do a 3D model of the 200 plus holes and our 8 holes, prove it's bigger. And then we're also, again, we have footprint areas north, west, and west that we believe make the Wedge bigger, and we'll drill those. So it's just prudent to drill it after we get these 2 geophysics surveys done, and it gives us a much sharper image. And we'll actually have Maxwell plate modeling and X's and target, subsurface target sweet spots in 3D.
Okay.
So
you just mentioned the timing. What is the timing that you're hoping for? Because I believe so getting the drone people on site took you longer than you had expected. Maybe is that going to slow down?
Yeah. The problem we had was, EarthX, we've been working them for several years and they're fantastic. But obviously, with the exploration in the camp being an all-time high, because it's obviously critical minerals and there's lots of activity going on, they couldn't get accommodations for their crew. So I had to help them get them accommodations and warehousing, because what they're doing, opening a presence in Bathurst full-time for EarthX and having a footprint there in the camp themselves. So it was a bit of a relocation rather than just mobilizing them in. But they're on site now. They're doing the borehole. And why we like to do multiple surveys at one time, it's obviously for economic exploration. If they have a down day or a standby day, rather than pay $2,000 or $3,000 a day for standby, because the solar flares can interrupt with the borehole and EM grids. While that is, they can go fly the drone. So we like to have complementary programs at the same time so we can maximize our return, geophysical return, and minimize our cash flow based on standby interruptions. So the nice thing with having them on site is everyone thinks it's going to take months to get these reports and deliverables. That's not the fact. So our relationship with EarthX is so strong. They're on our technical advisory team. When they have their borehole and it goes down and takes their shots every 10 meters, and at the end of every day, we get a report and we get imagery, and they'll be analyzing and interpreting that on a daily basis. We will have, not obviously pretty marketing, but internal reports with the information, which is the crucial part. We will know within days that the success and what's around that borehole, and do we have to change the hole or do we just continue on? And the rigs are on standby right now. The rigs are at the Wedge waiting to either go to California 10 or continue at the wedge, or California, wherever we're going to dispose them, because now with doing the whole portfolio, we can prioritize the targets based on these two really high definition proprietary technologies versus just geology, right? It's hard. I mean, there's no outcrop, and we could have just continued drilling the wedge, but what if it's target 6 or target 10 or whatever? This is the prudent thing to do.
Yeah. Well,
But
so
it
in
is going
terms
to be
of
very quick response. It is going to be very quick interpretation and response, not months away. It's days after they do the survey.
Okay, so in terms of chronology, how do you see it playing out? Like, you have news by the end of this month on this, and yeah, just walk me through sort of the timeline of how you see the rest of 2024 playing.
Well, our crews are on site as well, right? So our crew is on site with EarthEX and getting, live updates there, but also daily updates. All of us, management and our geological team on site in Bathurst get daily updates as well. So there's going to be a lot of news, and we'll be posting with our internal social media, press releases when applicable, etc. But it's hard because we're trying to balance press releases with actually just overworked and busy, right? Getting what's important done. So we'll balance that, but we're going to have the borehole. So the strategy and the roadmap is get the 2 boreholes done, maybe a third one or a second one at the wedge, which would be 3. That makes us decide, do we re-enter hole 10 and continue to target depth? And just it's super hard. I mean, obviously very attractive because there's a lot of cooked up plumbing in there. We've never hit anything that hard ever. And we're not at target depth, and it's very intriguing. And then we have, like I said, we've already press released our 11 target zones and trends on the Western portfolio. We're just going to go straight into drilling. We're financed for it, and we will drill in the priority that should reward our shareholder the best. So we'll be busy all the way up until December.
Okay. And in terms of news release, how often do you think you're going to have news releases out?
Well, when they're material, and obviously we're obligated, we get those out as much as we can. We are drilling, and not that it was designed this way, but when we have the full assays, because what happens is when you send in Canada anyway, when you send a 136 meter hole to the labs and they crush and prep it in New Brunswick, and then they send it to, 30 meters of that hole goes to Vancouver, 20 meters goes to Timmins. They all don't go to the same lab for processing. So we got to wait till the hole comes back in full before we press release. And that's why those press releases were out of hole order, if that makes sense. Like the last 2 holes in 8 program was 5 and 6. Well, those weren't drilled that way. That's the way they all came back, and we have to repiece the logs, wait till they're complete. So, but yeah, I mean, we're super excited and focused. I mean, obviously we love being active. Eventually we'll get rewarded, right?
Let's hope. That is the hope. I'm not hearing much about NMB, though, the first project that you came up with. You brushed upon it earlier, I suppose, but again, nothing specific. What do you want to do there specifically? When, how much, how? Well,
when you say the first project, can you give it the name so I don't make sure? You're talking about 9 Mile Brook?
Yeah, 9 Mile Brook. So NMB. Yeah. I said, I'm sorry, I'm using the acronym 9 Mile Brook. Yeah, so it's NMB.
Yeah. No, we've got them off and running on the Western portfolio, and now EarthEX, because we've acquired substantial grounds, and we know that what we believe is the additional lens components go east. We hadn't flown, again, cost of a 40 line kilometer grid, and we drilled on that grid, but again, there's no geological trends on that portfolio, so we really have to expand our grids and fly the drone and do surface EM or downhole EM, and that's what we're addressing with EarthEX right now for stage 2 at the 9 Mile Brook, while their crew is working on the Western portfolio. So we will have that roadmap shortly, probably within the month.
Okay. And then from there on, you're active all the way through December. you're covered financially. The news is going to keep flowing. Okay, good. I'm starting to get an idea of how this.
And obviously, the flow through, because we're very active and we like to put the money in the ground. Hopefully, our next raise will be a higher share price for flow through. And I know the government extended those financial credits, so flow through is still very attractive.
Yeah, it can be if you place it in the right hands, I suppose, which goes back to the financing part that we were talking about at the beginning there. But good.
Yeah.
No, Patrick, I'm getting a better idea of what you're doing here. There's a lot. I mean, the lot is up in the air kind of right now, and how you manage the next couple of the next 12 months is really going to be crucial. But thank you though for the overview. What am I forgetting to ask you though? What did you come here hoping to talk about that I'm not bringing up?
Nothing. I mean, we're very proud of our company, and like again, I said, like, I mean, if we had drilled and had a new discovery, a 50-meter hole, 100-meter hole, we wouldn't be sitting here right now at these levels, right? But it's a hard balance of running a company prudently and doing it the scientifically way, rather than just go out there, rush, drill, and throwing darts and wasting a lot of money and damaging the reputation of your projects, right? So it is expensive. We are using the leading edge technology, and we believe that's what it takes, and we're committed to it. And you can see that by our share positions and the fact that we still own all our stock and didn't even take advantage of that when we're in the 40s. We believe in our projects. We believe there's deposits on our projects, and we're going to go execute the best we can.
Good. Patrick, thank you so much for this overview. I appreciate you investing your time in me, and hopefully we can do this again in the future.
Well, thanks for inviting me. I really appreciate